stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zapo Bank. The only way to bank your Bitcoin. Apply now at zapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Welcome back to RoxomTV, everyone. My name is Walker America. I am with you every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time here on RoxomTV, breaking down the latest news in Bitcoin, and there are apparently other news stories in the world. We hit a lot of those too. The price of Bitcoin at the time of streaming is $64,244 infinitely printable Federal Reserve notes per Bitcoin. We're going to go ahead and get into today's show. We've got a great one ahead of you. Got a couple of guests joining. In the second hour, we'll have Adam O'Brien, and then in the third hour, Isabel Foxen-Duke. But for the first hour, it is just you and me. So let's go ahead and get started with our first story of the day here on RoxomTV. And this is about our old friends, Jeffrey Epstein's bankers over at J.P. Morgan. Because new court filings revealed that J.P. Morgan Chase closed more than 50 accounts linked to Donald Trump and his businesses in February 2021, roughly 1 month after the January 6th Capitol attack. The disclosure surfaced in Trump's $5 billion lawsuit against the bank and was first reported by CNBC. The accounts reportedly included both commercial and personal banking relationships. In a letter cited in the filings, J.P. Morgan told Trump he should seek a, quote, more appropriate institution to conduct business with, effectively confirming what many in Bitcoin have long described. Politically exposed clients can be cut off from core financial infrastructure. This lands in the middle of a long-running dispute over so-called debanking. In 2024, NBC News downplayed the issue, even placing the word in quotation marks, while reacting to comments by venture capitalist Mark Andreessen on the Joe Rogan Experience, where he argued that crypto firms were being systematically excluded from banking services. The Trump family has publicly tied that experience directly to their pivot towards Bitcoin and crypto more broadly. Eric Trump has repeatedly said they entered the industry after being frozen out of traditional finance following 2021, framing Bitcoin and blockchain rails as a hedge against financial gatekeeping. Now that JP Morgan's own filings acknowledge account closures tied to that period, the debanking debate seems to be a known fact. Now, why does this matter? This is not about sympathy for one political figure. It's about control over financial access. I don't care who you are, red or blue, you are susceptible to this depending on who's in power and who happens to be in favor or out of favor politically at any given time. And it also doesn't matter if you're a politician. This over right in our attic of America, over in Canada, they debanked peacefully protesting truckers during the trucker protests. So honk, honk. If the president of the United States, with global brand power, massive legal teams, billions in assets, if he can have 50 plus accounts shut down across personal and commercial entities, then access to the banking system is not neutral infrastructure. It is highly conditional. This is precisely the argument that us Bitcoin proponents have made for years. A permissioned financial system can be weaponized, whether against controversial industries, political actors, or ordinary citizens with no leverage. Bitcoin doesn't close accounts. It doesn't care. It doesn't send letters advising you to, quote, find a more appropriate institution. It runs on open source code and voluntary consensus. And now, one of the largest banks in America has unintentionally provided the strongest case yet for why that matters. Now, guys, if you've been watching this show at all, if you've heard me speak, you may know what I'm about to say next. Because when I hear JP Morgan saying that, admitting that they said to President Trump at that time, former president, that he should find a more appropriate institution, I just have to wonder, a more appropriate institution. Okay, just because, their institution, JP Morgan Chase, banked Jeffrey Epstein for years, many years, even after many of the findings about just what a piece of garbage he was came to light. So, again, a more appropriate institution, does that mean one that doesn't bank pedophile sex traffickers? Is that what they mean by that? Or do they mean something else? They mean someone that doesn't bank blackmailing operatives of foreign governments? Is that what they mean? I'm just a little confused at what JP Morgan Chase means by more appropriate institution. Because it would seem that they have no problem with impropriety. They have no problem with banking criminals. I mean, every major bank, I don't want to just pick on JP Morgan Chase here, all right? They're nothing special. Because whether it's HSBC, Deutsche Bank, name any massive bank, they all of them pay hundreds of millions or billions of dollars a year in fines as a cost of doing business. What are they paying the fines for? Well, they're paying the fines because they routinely bank and launder money for criminals, terrorists, drug traffickers, cartels, what have you. It doesn't matter. They are happy to take anyone's money as long as it is green, right? Or whatever color, rainbow colored euro note they happen to be doing over there at Deutsche Bank. But the point is that this is obviously political. And it doesn't matter what you think of Trump here. Try to remove yourself from the partisan forced duality that we have here in the US, the Coca-Cola, Pepsi-Cola democracy, all right? I don't care what you think about Trump. This isn't about what I think about Trump either. This is purely about the fact that no matter who you are, if there is a politically motivated reason and the powers that be say that they want somebody kicked out of the banking system, that's just going to happen. There's nothing you can do to stop it. If the president of the United States can have his accounts closed, can be debanked, if the president of the United States can have that happen to him, it can happen to you. It can happen to anybody who steps out of line. And also, if the president of the United States can be kicked off of centrally controlled social media platforms like President Trump also was, and again, this isn't me fanboying for Trump, guys. This is me trying to remind you that it doesn't matter who you are, because if one of the most powerful people in the world can be kicked out of banks, can be kicked off of social media platforms, then anyone can. Literally anyone. Unless you're just perhaps like the biggest statist cuck there ever was and you never run afoul of the powers that be. But boy, that's pretty hard when the pendulum swings back both ways at any given time. And so what I'd really like to highlight here is just the fact that this is exactly why Bitcoin exists. This is exactly why we have also decentralized social media systems, protocols like Nostr. You need these when the people in power have the ability to shut you off from the banking rails, shut you off from the social media communication rails. This is exactly why these open source, decentralized, censorship-resistant protocols for both money and for communication exist. And it's why you should use them. Because you may think, well, okay, that's Trump. He was such a high-profile figure. This is obviously, politically motivated, but whether or not it's good or bad doesn't really matter because this wouldn't really happen to me. I'm not going to be president. I'm not going to be in anyone's crosshairs, right? I'm not going to be debanked. I'm not going to be deplatformed. I'm just here minding my own business. But the point is that you can be. The Canadian truckers didn't think that just for peacefully protesting, they would get debanked, cut off from the financial rails, just for simply, again, peacefully protesting. But they were. If it can happen to the president of the United States and it can happen to truckers, it can happen to you, right? The problem is that there is a trusted third party involved, that there is a throat that can be choked by those who are politically powerful as well. Whether or not this was JP Morgan Chase just deciding we don't like this guy, let's get him out of here, or whether this was somebody inside, the Biden administration who was pushing hard for this to happen. We know that there's a revolving door between Wall Street and Washington, D.C. This is no secret. This is kind of how it works over there, right? And so were favors traded to make this happen? I don't know. Probably. That tends to be how DC works. Tends to be how Wall Street works. Hey, you make sure that we take care of this. We'll give you guys a spot in the next administration, or we'll pass this particular piece of banking legislation that you want passed that creates an even more favorable regulatory environment for you. Horse trading is how DC functions. It's usually horse trading that is to the detriment to the American people, but that's another story. Again, before I wrap this story up, I just want to leave you with that. I mean, I have to go back to this initial point that they said, which was that they need to find a more appropriate institution for his banking needs. Because again, at JP Morgan Chase, they draw the line at former presidents of the United States. But hey, if you're a pedophile, sex trafficker, human trafficker, money launderer for foreign governments, blackmailer, that's all right by them. As long as your money's green, it doesn't matter to them. Just don't be a politically inconvenient person, right? That's where they really draw the line. Absolutely ridiculous. Great advertisement for why Bitcoin is so important. Unfortunately, with the Trump admin, it's a shame that they wasn't focused more on the Bitcoin side of things, and that instead, Trump and Melania both launched shitcoins right before he entered into office. But hey, you can't win them all, right? And everybody's got that shitcoining phase. Some are just done from the bully pulpit of the presidency. Let's go ahead and move on to the next story here for the day, which is about you handing over your face to prove your age. And where did it actually go? Because if you've used Discord, ChatGPT, Roblox, or LinkedIn in the past year, there's a good chance you were asked to verify your identity. Scan your face, upload your government ID, prove that you're old enough to use the platform. They love those age verification checks, of course. Most people do this without thinking. 2 stories that broke this week show why you should take a pause and think about it next time. The first, a company called Persona handles identity verification for many of the biggest platforms online. When Discord asked users to prove their age, Persona was the company processing those selfies and IDs behind the scenes. Security researchers discovered that Persona's software doesn't just check your age. It runs 269 separate checks on you, including scanning your face against government watch lists, screening you across categories like terrorism and espionage, and assigning you a risk score. Boy, that sounds awfully similar to a social credit score. The software can also file reports directly to the U.S. Treasury's Financial Crimes Unit. How convenient. All of this was found because Persona accidentally left its entire system architecture exposed on the open internet, on a server authorized for use by the U.S. government researchers. They didn't have to hack anything at all. It was just sitting there, and this same software that runs the government version is built in the same code as the consumer version, the one that's checking your age on Roblox. Discord dropped Persona within days, but Persona still provides verification for OpenAI, Roblox, Lime, and LinkedIn. Persona is partly funded by Peter Thiel's venture firm, Founders Fund. Thiel co-founded Palantir, the surveillance technology military-industrial complex company, and Persona CEO denied any operational ties to Palantir or to U.S. immigration enforcement, though he confirmed the company is pursuing government security authorization. Now, that's the first story. The second story was a separate identity verification company called ID Merit was found to have left a database containing roughly 1 billion personal records completely unprotected online. No password, no security, just wide open. The data included full names, home addresses, dates of birth, national ID numbers, and phone numbers from 26 countries. The US was the hardest hit, with over 203 million records exposed, followed by Mexico, the Philippines, Germany, Italy, and France. Now, ID Merit is a small company, fewer than 50 employees. They were sitting on 1 billion people's most sensitive information with the digital equivalent of an unlocked front door. Now, why does this matter for you? Well, governments around the world are pushing platforms to verify who their users are. Age checks, ID requirements, biometric scans, etc. The platforms outsource that job to a third-party company, and most of these people have never heard of that company. Those companies end up holding your face, your ID, your address, and your risk score. And as this week showed, one of them was quietly built to feed that information to federal law enforcement, and another left 1 billion records sitting in the open because nobody put a password on the database. The ask was simple. Just prove you're not a kid. This is all just to protect the kids. It's for your safety after all. And who doesn't want to be safe and protect the children? But, the system behind it was not so simple. You were told it was about safety. The architecture says it was about a heck of a lot more than that. Now, this has been a very consistent theme that we have been covering here on Roxom and on my show specifically. We've dug into this quite a lot because you're seeing this all over the world, right? We've seen this time and time again, whether it be in Australia with the under 16 ban, the UK trying to do the same thing, Discord doing this as a private company. All of these things are done under the guise of, hey, we're just trying to protect the kids, right? It's the government's job to protect the kids after all, right? Not the parents' job to enforce any kind of accountability. No. Let's just give all of our agency over to the government and we'll let them control it. And of course, the government's going to give a sweetheart contract out to some third-party contractor, probably the cousin of one of the people who writes these laws in the first place. I don't know, but I bet if you dig a little bit hard, you can find some interesting links there because these are massive contracts. But this is happening everywhere. Just recently as well in the UK, they confirmed that they're going to force age checks on every regulated social platform and VPN access for anyone under 18. So, the idea of online anonymity is going to be completely dead in the UK. And this, again, is just a common thread we see everywhere. It's always put up as being something that's about protecting the children, about keeping you safe. And I mean, who would argue against protecting the kids, right? Who would argue against that? Well, you should argue against it because ultimately this is not about protecting kids at all. This is about destroying any semblance of pseudonymity or anonymity online. It's about, again, creating risk scores, as this other company we just heard about was doing. They're creating social credit scores for you. They're tying your digital identity, your digital, whether that's through an actual digital ID or your anonymous digital persona on social media, they're tying that to your physical real world identity. They're scraping tons of databases. They're getting as much information they can about you. They're getting your home address, your date of birth, national ID number, social security number, all of that stuff, your picture of you, picture of your license, biometric scans. They're getting all of that. They're combining it together to make sure that they have a perfect digital snapshot of who you are. And then they're going to tie that to everything you're doing. And you can see in the UK, they're going to basically have IDs for everybody who is using VPNs as well, because they know you can easily get around some of these things if you just VPN to a country that's not quite as totalitarian as the United Kingdom. And this is the plan, right? The plan is to continue going down this path of totalitarianism. They hope that you're going to sleepwalk into totalitarianism, that every time it's just a little gradual step, right? Just an age check to prove you're not a child, because we want to protect the kids, right? And then it keeps going further and further. Well, what we need age checks maybe for everything you do on the internet, not just social media, but anything you want to access. Maybe you need to have an age check to even get online at all in the first place. All of this, though, done under the guise of trying to protect the children and keep them safe. It's not about that. That is always how government tries to package things. How would you like this wrapped? They said to Uncle Sam, would you like it counterterrorism or protect the children? It is always one of the two. It's always about trying to make you think there is some sort of imminent threat, either to you or to the most vulnerable in our population. And it's reasonable that people fall for this because, I mean, it's emotional manipulation, right? But this is what they do. The government does not have your best interest at heart, doesn't have the best interest of your children at heart. It can't. The government can never care about your children as much as you do. It's literally not possible. The government's just made up of people who, again, can't care about your children as much as you do. It's up to you to keep your children safe. It's up to you to set boundaries for your children about what they can and can't do online. Or maybe just don't give them a phone at all until they're old enough to be able to handle it. And they're going to be just fine, right? They're going to be just fine without that. Get them an old, flip phone burner if you need to. Like most of us, if you're about my age, you didn't get a phone. I didn't get a phone until I was 16, I think. And it was a Motorola Razr. Gosh, you could like barely, just starting to be able to text on that thing. And it was like ridiculous rates, I remember at the time. I digress, and I also date myself. But the point here, again, is that all of these sorts of rules that they put forward under the guise of keep people safe, keep you safe, keep your children safe. What kind of bad person would possibly be against this? Don't you want to protect the kids? It is all about control. It's all about surveillance. It's all about knowing exactly who is dissenting. Because when push comes to shove and we're a couple years down the road and your government starts doing something that is truly beyond the pale, something that you say, I cannot go along with this. I cannot be silent about it anymore. Well, they're going to use this against you. You already see this happening in the UK. In the UK, there have been thousands and thousands of arrests for social media posts because they were, made people have their feelings hurt or something like that. And what is a great way to circumvent that and be able to say what you want online without getting thrown in jail by the baddies over there in the UK? Well, that's by being anonymous online. But what if you can't be anonymous online anymore? What if in the United Kingdom, you have to be ID'd to even get a VPN? You have to be ID'd to use social media, all of this. Well, then that makes sure that even if you are anonymous online, you're operating under a NIM, they can still get you. They can still take what you did in the digital world, which is apparently highly offensive, and offending people is a crime in the United Kingdom, and they can take that into the physical world. They can put you in jail. They can put you behind bars. They can take away your civil liberties if you had any in the first place. So this is why you should be concerned. It's not because, a lot of people, again, like to think, well, I'm not doing anything bad right now. This doesn't affect me. Just don't do anything to run afoul of the authorities and everything will be fine. The problem is what constitutes running afoul of the authorities continually changes. It's a moving target. There will be a time where simply being a law-abiding citizen who occasionally speaks their mind online makes you a criminal in their eyes. I think we're already there in many countries. I think we're already there in the UK. That shouldn't be the case. And, to our friends over there in the UK, I feel for you. And I hope that things get better over there. Not that things are perfect here in the US, but we're not quite as far along that totalitarian temptation spectrum as you are. Excuse me. And so, again, I would just remind people, be vigilant about this. Don't give into it, just because they say it's about protecting the kids. Apologies, guys. I lost my voice last week, and it's like I'm hitting puberty all over again. So I'll summarize with this, then we'll go to a quick commercial break. This is never about protecting the kids. This is never about keeping anyone safe. This is all about control. It's about control of your speech. It's about control of your money. It's about control of your movements. It's about control because control is what they must have if they are going to usher in the sort of totalitarian hellscape that we are firmly marching toward. So reject this at every turn. Start using these tools now, not later once it's too late. You want to be using these things right now because there may become a time when it becomes very, very difficult for you even to be able to access VPNs and things like that. So protect yourself and protect your family by taking advantage of the freedom tech tools that are available to you right now. That is the best way you can do it. And protect your kids from the dangers of social media by not letting them go on social media if you're worried about it. Don't abdicate responsibility for your children to the government because the government doesn't care about your children. The government cares about control. Okay, we're going to hit a quick commercial break. I'm going to drink a little bit of tea, and then we will be right back here on RoxomTV with more. Stay tuned. Don't touch that dial. I'll see you in a moment.
This is Alex, Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zapo Bank. The only way to bank your Bitcoin. Apply now at zapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Welcome back to RoxomTV, everyone. My name is Walker America. We are just 30 minutes into our 3-hour marathon here on RoxomTV. You can catch this show every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time here on Roxom. The price of Bitcoin is approximately $64,305 infinitely printable Federal Reserve notes per coin. And we're going to go ahead and get into our next story, which comes to us. I'm just going to actually read you a tweet from my friend, my mate, as they say down under, Checkmate, because he's one of these people that I think puts out some of the best analysis in Bitcoin, really objective, data-driven analysis. He always talks about it. You know, he now analyzes with Check the Analyst versus Check the Hodler and gives you his perspective on both. And I think this is exactly the kind of high signal information that people need to be paying attention to right now. You can check him out. He's Checkmatey, or just search Checkmate on X. You'll surely find him. Check on Chain as well is his newsletter that he puts out. Really solid information. So please go do check that out. But I'm going to go ahead, check that out. No pun intended there. But I'm going to go ahead and bring up this tweet from Checkmate and then read through it, because again, it provides just a ton of information on exactly where we are right now. So Checkmate posts here on X: every mean reversion model from technical to on-chain is trading within bottom formation levels, typically seen after the price capitulation event, which December 2018 and June 2022 were examples of. Both sell-offs in November and February are in the Hall of Fame of realized loss on chain. Side note, realized loss is one of these metrics that Checkmate really often references as just a very good sort of barometer for where we're at. Okay, continuing. Not the biggest in relative terms, but by far the largest in USD terms, over 7.5 billion over just those 2 days. We're in the bottom 20% of the most conservative and the bottom 5% of the most aggressive deviations from any sane anchor model. Either Bitcoin is dead, will no longer mean revert, and all your models are broken, or you should be ignoring the bears, staying very humble, and quietly DCA stacking sats from here on. Price pain is largely behind us, in my humble opinion. However, time pain likely remains. It will claim many who don't want to see the rest of the movie. We often experience retests of the lows, leaky price charts, powerful rallies, and then lower lows, often with a final capitulation event to bookend the time pain chapter of the bear. In my view, even though this sounds horrific, it is unlikely we have anywhere near the aggressive rate of decline, nor depth of the decline as has already occurred in November 2025 or February 2025. The hard part of the drawdown is most likely behind us. The difference between 17.6K in June 2022 and 15.6K in December 2022 was 6 months. The price delta is frankly irrelevant for any long-term investor, he notes. There is no rush. These Bitcoin prices are temporary. How temporary, we do not know, but it's tremendously oversold, and there are few statistics I am aware of that suggest otherwise. The bears will spend the next few months liquidating their trading accounts, trying to short the bottom of a painful chop-solidation range. The bulls will do the same by getting too hopeful at the range highs. Investing is a game of picking great assets, accumulating at low prices, and then being patient as fuck. The 200-week MA is at 58.5K. A mere bee's dick below, side note, was not aware of this saying a bee's dick. I think it must be an Australian thing. Might have to start using it. A mere bee's dick below the 60K low we already set. There are still folks out there who want to haggle over the missing 3%. The realized price is at 55K, which from first principles should stop being visited over time as it deviates due to unrealized profit in lost coins, a topic for another day. We've already cleared every excess leverage level down to 60K. No stop losses survived February's move. This is the time to stay humble and stack sats. If you're not actively accumulating Bitcoin at this range, then when? Don't fantasize over lump summing the exact bottom wick. You will be too scared to do it on the day. Buy the whole bottom, dollar cost average for the next 6 months, and remove your emotions from the problem at hand. A final note, ignore the bears. They will perpetually revise their targets lower and lower and get plenty of clicks for doing so. Humans love bear porn because we're wired to avoid risk. That is literally what a this is literally what a de-risked setup looks like for Bitcoin. Ignore the bears, they lack ambition. I absolutely love this from Checkmate. And again, please do go give him a follow. He is well worth it. Consistently, I think one of the most level-headed and data-driven analysts out there. And I'm not usually a fan of looking at the different chart boys who like to put all these lines out there. Checkmate does all of what he does primarily based on on-chain analysis, right? He's looking actually at how Bitcoin is moving on the time chain. He's not just drawing random different colored lines from different peaks and troughs on his trading view chart like everybody else does when they want to get a bunch of clicks. And Checkmate also calls that out in this post. He talks about the fact that, bears are just revising their targets lower and lower because they get lots of clicks for doing so. We're wired to avoid risk as humans. So this is just something that, people love the doom porn. Just like people love hopium, love injecting that hopium straight into their veins when we're pumping. People love the doom porn. They love the bear porn. They love the fear, right? And you want to stay away from that, right? And this is what gets clicks. This is what drives people to go and, click and maybe subscribe to your doom porn newsletter and, commit $5 a month or whatever it is. And this is why I like Checkmate. He's consistent. He's always providing some much needed perspective on what's actually happening. We'll have to get him on here on the show pretty soon to talk about this because, again, I think that a lot of people right now, and I get it. Let me take a step back and say, I get it. I get the fear right now. It's reasonable to feel that fear. But when everyone, when it was 125 and most people are saying, get ready for 150, get ready for 200, get ready for $1 million straight off the bat. And hey, was I maybe guilty of that a time or two, getting a little bit too bullish for the moment? Absolutely. Of course, I am also human. I am not perfect. I'm also not an analyst. Don't claim to be. And so what I want to point out though here is that you get that same sort of misplaced conviction at the bottoms too, where people are basically, wow, it's been so bearish for so long. We've been chop solidating. That's one of the other terms that Checkmate, I believe he coined it actually, chop solidation. Just sideways, getting closer and closer, range bound, maybe chopping to the bottom a little bit. That is what shakes people out. That is what gets people to finally capitulate. And right when people are really finally capitulating, when everybody's finally throwing in the towel, okay, it's going lower. It's going, in 2022, it was when it was bumping around right around 19K, which it hit over and over again. People were saying it's going to 10K, maybe 5K. If you were Peter Zahan, you said it's going to 0, maybe negative even. Absolute genius there. But in reality, it was almost at the bottom. Went down to 16K, that was the bottom. It went up from there. It went up from there hard and then eventually went all the way to 125K. So it's important to remember that consensus around any particular price movements tends to be not the best barometer for what you should follow. People tend to jump onto whatever the bandwagon is, and a lot of that is just algorithmically driven, right? Because people see that, okay, Doom posts are getting clicks, so they're going to make more Doom posts so they can get more clicks to feed that dopamine addiction that they have, right? They like Doom porn and they like dopamine. And boy, if they can get them both at once, well then hot diggity dog, what a day. There's another, another point here, which is just that, again, there's this negative feedback loop that is created that is algorithmically reinforced. BitPain talked about this a little bit. He posted about it. It's another great account to follow. It's at BitPain. Check him out as well. But he made a great point that as people spend more and more time online, they lose the natural negative feedback or calming effect of natural social interaction. And they're unconcerned, basically they're unconcerned with people, instead get shunted into echo chambers that create existential crises out of every issue. Now, he was talking about AI, other things about Trump or immigrants, whatever. But the point stands for Bitcoin as well, right? This idea that everybody is thrown into their own little echo chamber. It's reinforced. Their preconceived notions are reinforced algorithmically. And then everybody sort of gets this rough consensus around, yep, I guess Bitcoin's over this time. I guess it's going lower. I'll sell right now and I'll buy back when the bottom really forms. But of course you won't. As Checkmate pointed out, you'll be too scared at that time to lump sum in because some analyst, other analyst that's not as good as Checkmate, is going to tell you it's going lower when it's actually the bottom. And you'll wait and you'll wait and you'll wait and you'll miss the biggest moves up. And this is another reason why I think it's so important for people. For the average person like me, I am not an analyst. I am not an expert trader. I don't trade Bitcoin, right? I buy it, I hold it, and I spend it on goods and services wherever I can and then immediately replace it, right? But if you're like me and you are not trying to trade Bitcoin, you've got other things that you're trying to do with your life, you're trying to spend time with your family, you're trying to create value so that you can stack more sats, well, then what you should be doing is just dollar cost averaging. If you can time the bottom perfectly, you can drop in a big old lump sum, hit the exact bottom, more power to you. That is not me. And I suspect it is not most of the people who are listening to this right now. So it's a good reminder that, again, as Odell has said for a very long time, and as Checkmate reiterated here, the best thing you can do is stay humble, stack sats. I'll add on to that, try to create value for society and so that you can stack more sats and ignore things, right? If you are not levered to the tits, if you did not try to trade this, Bitcoin this last, year and a half, if you just kept buying Bitcoin, dollar cost averaging, you're doing okay on this dip because you have more Bitcoin than you did at the start of this dip. And you're accumulating Bitcoin at a faster rate than you did at the start of this dip. That's the beautiful thing about DCAs is they reward you more when Bitcoin is lower. You're getting more sats per dollar. It's a sidebar, but I hope more exchanges implement this. But River implemented a feature that's basically supercharging your DCA buys. So whenever Bitcoin is below whatever short-term moving average, it automatically doubles your DCA. I love that. It's an automatic way for me to stack more sats. and not sponsored by River, just really love that feature and think that everybody should implement it if they want people to actually just accumulate more Bitcoin in their savings. So again, maybe one of the things that I would just reiterate one final time from Checkmate's piece is that, he's saying basically, if you're not actively accumulating Bitcoin at this stage, then when? Don't fantasize over lump summing the exact bottom wick. You'll be too scared to do it on that day. Buy the whole bottom. Dollar cost average for the next 6 months. Or if you're like me and maybe you should have turned off your dollar cost average, you should have turned it off and put it on right now, but maybe you didn't. You'll be okay too, because you're still going to buy this entire bottom. But finishes with, remove your emotions from the problem at hand. It is hard to do. It is easy to get wrapped up. But remember, we are also what we give our attention to. And how the algorithm treats us is also based on what we give our attention to. So if you want to stop seeing so many bearish posts, stop liking them, stop interacting with them. Go look at all the incredible stuff that's happening on the medium of exchange development side. There's a lot of incredibly bullish stuff there. If you've been following that, you've never been more bullish on Bitcoin. If you've been following adoption, you've never been more bullish on Bitcoin. And that's sort of where I'm at right now. And I think that actually kind of brings us into our next story here. I want to talk about this story with regard to River. They just published a new report out here, and the report is quite interesting. Essentially, the idea of the report is that there is no bear market in Bitcoin adoption. Excuse me. So I'll go ahead and read through some items of this report here, because again, I think this is the kind of analysis that people need to be seeing right now. You need to be looking and being realistic about where we are. Have the results been perhaps disappointing over the last however many months it's been? I've lost count now. 12, 14, 16, 18, something like that, where we've been chop solidating, kind of going down or sideways, but with some spurts up. We hit the all-time high. Now what's happening? We're so far off of that. Is Bitcoin dead? No, it's not. The problem is that you're paying attention to the wrong things. And this is the idea of this River report here. So they say Bitcoin is down 50% from all-time highs, but adoption is compounding in ways that aren't affecting price yet. You might be surprised by these 8 adoption trends. So the first one that they break down here is institutions are buying record amounts of Bitcoin. Institutions accumulated 829,000 Bitcoin in 2025. This includes purchases by businesses, governments, funds, and ETFs. Importantly, these institutions represent millions of underlying individuals gaining exposure to Bitcoin for the first time through brokerage accounts, retirement plans, sovereign funds, and corporate balance sheets. Now, again, this is, I think, a really important thing to highlight, the fact that institutions have been buying so much, not because I'm saying, yes, we need the institutions to save us. Quite the opposite. More so just that, look, the quote, smart money is buying while you are panicking. Do not let the smart money take your sats. Excuse me for a moment while I get a little bit of tea to treat this brutal voice. Thank you guys for sticking with me. Okay, moving on. Wish that was a beer. They asked the question, who's selling to them? Who's selling to these institutions? They show that in 2025, a lot of this selling came from long-term holders and large individual whales. Early adopters, they accumulated years ago, and now they're distributing supply into deeper, more liquid markets. Now, while these institutions may own a majority of Bitcoin within a decade, if this trend continues, individuals still control roughly 2/3 of the total supply today. That is insanely bullish, in my opinion. They ultimately set the marginal price at which institutions can accumulate. Institutional access doesn't replace individual ownership. Instead, it expands the top of the funnel. Many ETF holders today are future self-custody users tomorrow. I really hope that is the case. Now, another one here is that investment advisors have been net buying for 8 quarters in a row. So registered investment advisors, RIAs, they're the largest investor class in the world, overseeing approximately 146 trillion in client assets. RIAs have been only recently begun allocating to Bitcoin ETFs following their launch in 2024. But even at this early stage, their behavior towards Bitcoin is extremely encouraging. River notes that it's also what the data shows. RIAs have invested roughly 1.5 billion in Bitcoin ETFs per quarter over the past 2 years, without recording a single net selling quarter. So it is up only. And RIA adoption is widespread. 29 of the top 30 US RIAs already own Bitcoin, exposure through the ETFs, of course. but their allocation is still very small. Average investment advisor has a Bitcoin allocation of just 0.008%. So it's very low, but it is growing. It's a small part of their overall holdings, but it is a growing part of those holdings, especially as Bitcoin starts to perform better. Another note here is that 60% of top US banks are building Bitcoin products. And River notes here, with a favorable regulatory environment in the US, banks can now custody Bitcoin and offer Bitcoin products to their customers. At the top of that list, JP Morgan Chase has even announced that they're going to be building some of these products. So we'll see what happens there. Number 4 in River's list is that adoption by public companies grew by 2.5x in 2025. Businesses were the largest buyers of Bitcoin in 2025, as we've covered here, with the majority of these purchases being driven by Bitcoin treasury companies. But beyond treasury companies, many large corporations are quietly accumulating Bitcoin in more modest sizes. This is the type of business adoption we expect to scale across the S&P 500 in coming years. Again, it would be absurd to assume that Bitcoin is not going to be a part of every major company's balance sheet. Also, every minor company's balance sheet, every mom and pop's balance sheet. Bitcoin is a great asset to hold for the long term, and we're going to see a lot more of that adoption. But we also see medium of exchange adoption accelerating as well, because merchant adoption, this is point number 5 in River's article. You can go to their handle @River if you'd like to check out the whole article, or river.com. Merchant adoption grew by 74% in 2025. The number of businesses in the US accepting Bitcoin for payments tripled, while global usage grew by 74%. Companies like Steak and Shake have shown that using Bitcoin cuts transaction costs and improves their bottom line. And in the case of Steak and Shake, shout out to them. Every time I've gone to Steak and Shake since they started accepting Bitcoin, I have paid in Bitcoin and bought back that Bitcoin right after, guys. Don't worry. But this is fantastic. They're holding Bitcoin they're accepting Bitcoin. When they accept that Bitcoin, they're then holding that Bitcoin in their corporate treasury. They're also now starting to pay their employees 21 cents an hour, 21, you can imagine why, in Bitcoin and with a vesting schedule. I think this is fantastic. This is what merchant Bitcoin adoption looks like and should look like. But many of these businesses, as River notes, are smaller in size. They don't publicly report their Bitcoin strategies. They also go on to say, at River, we serve over 3,000 businesses from all industries. We see firsthand how business adoption is strongest among small private companies. And as you can see here in the chart, at the top of that is real estate. Then, of course, Bitcoin mining and services, that makes sense, followed by consulting, software, services and hospitality, healthcare, nonprofit, construction, consumer product, finance, energy, transportation, agriculture, industrial, legal at the very bottom. But who knows, maybe the lawyers will start stacking more sats too. Number 6, and this one is again massive on the medium of exchange side. One of those things that makes me so bullish and should make you bullish too if you're paying attention to it. The Lightning Network grew by 300% in 2025. So according to River's estimations, the Lightning Network is now processing over $1.1 billion in monthly transaction volume. This is largely driven by organic adoption from exchanges and businesses that are accepting Bitcoin payments. That is just huge for me. I mean, to see that massive of a 300% gain in 2025 is incredible. That should make you super, super bullish. This is point number 7. 5 additional nation states hold Bitcoin. 5 nations became new Bitcoin owners in 2025. This included purchases by 2 sovereign wealth funds, Luxembourg and Saudi Arabia, and 1 central bank, the Czech Republic. That was the first central bank to do so. I think they accumulated something like $1 million worth of Bitcoin for a central bank. Maybe not a lot, but still, it's the first of many. These nations have accumulated Bitcoin through state-backed mining, purchases of Bitcoin and ETFs by central banks and sovereign wealth funds, donations, seizures, and hacking. In addition, it has been 4 years since any country has banned Bitcoin, with Afghanistan in 2022 being the last, and then, China, I think, banned it maybe 13 or 14 times in the decade prior. So it's becoming clear, as River notes here, that embracing Bitcoin is in their best interest. It's in the best interest of the nation state. And, a note on this, you don't have to like that nation state adoption is happening. Or that corporate adoption is happening. You can say Bitcoin is just for individuals. It's for plebs. It's for people like me. That is true. But Bitcoin is for anyone who wants to use it. That is the entire point. And if Bitcoin is winning, is going to win, will continue to win, which I believe it will and is, then this is going to happen. Of course, everybody is going to want a piece of this finite Bitcoin pie. Now, point number 8, Bitcoin is no longer too volatile. Bitcoin is continuing a decade-long trend of declining volatility, nearing that of gold and the S&P 500. Why does this matter? It signals that Bitcoin is increasingly viewed as a mature asset class. As volatility falls, the hurdle for more risk-averse investors declines. Over time, that opens up the door to larger pools of capital. The most recent bull market is evidence of this. Bitcoin attracted more investors in 3 years than in the rest of its history. Let me just go ahead and say that again. Bitcoin attracted more investment in 3 years than in the rest of its history. You should pay attention to this. Now, looking to 2026 and beyond, River concludes with this. While Bitcoin's price has underperformed over the past year, adoption is telling a very different story. The adoption we're seeing is not the kind that will cause the price to 10x overnight, but in some ways it's more meaningful. Each year, Bitcoin grows from individuals, businesses, institutions, and nation states. That's because it continues to prove itself as the world's only scarce and incorruptible form of digital money. We expect that in the coming years, Bitcoin adoption will not only continue its current trend, but meaningfully accelerate. And again, you can go to check out river.com/research for this full report. Again, I want to thank River for putting this out. They put out a lot of great Bitcoin education. And again, I think that people should really be paying attention to this, right? Because if you are feeling bearish right now, it is probably the case that you may just not be paying super close attention. There are all of these different tailwinds that are coming on. Now, what are they going to do as far as price? Is Bitcoin going to 10x overnight? As River pointed out, yeah, probably not. I mean, anything can happen, but probably not, right? But what will happen is we'll continue to see this slow and steady grind. In my mind right now, and this is something, guys, if you've been listening to this program on Roxom, if you've been listening to Roxom in general, all of our great hosts and guests that we have on here, a recurring theme that a lot of us have touched on is that there's a massive disconnect between the underlying reality and what the price is showing. Now, I'm not going to be one of those guys saying, well, the market is wrong, not me. But I think the market is just not pricing this correctly right now, right? And, there's all sorts of, we don't need to get into the weeds of, is the market ever wrong? Well, if it's a free market, well, we don't live in a free market, guys. I hate to break it to you. We've got a central bank that controls the price of money. That aside, not getting into the weeds, maybe until later, maybe until Adam O'Brien, our next guest, comes on. The point here is that if you look, have the fundamentals of Bitcoin changed? No. Is Bitcoin still decentralized and secure? Yes. Is there massive and meaningful medium of exchange adoption happening on an ongoing basis? Absolutely. 300% Lightning Network growth over 1 year. Also saw the $1.1 billion per month that we see in Lightning Network volume. Businesses adopting it. River alone, they're servicing 3,000 different businesses from all different sectors. That's huge. That's the kind of adoption that I'm most excited about. It's not about, okay, do I love seeing Saylor make a massive smash buy week after week after week? Sure. But what I really love seeing is small to medium-sized businesses that aren't publicly traded, that don't have the same access to cheap capital that these publicly traded companies do. Seeing them adopt Bitcoin, putting it on their own balance sheets, creating their own Bitcoin strategic reserves for themselves. I love seeing it from individuals. I love seeing my friends and family start to stack. I recently had a very proud son moment, guys. My parents were visiting recently, and I after a long time of trying, I got them to start DCAing gradually into Bitcoin. I was so happy about this. They paused for a little while, got them to start back up. It's kind of a back and forth, right? And when Bitcoin would dip, they'd say, "Well, boy, is it a good time to sell?" And I'd be like, "No, please do not sell when Bitcoin is dipping. Just literally just hold this. You're just DCAing a little bit, not a big deal. Just stick with it." But this time, this was maybe a month ago, as Bitcoin was dipping, both my parents said to me, "Well, Bitcoin, I saw Bitcoin was down," and I was just preparing myself for it, thinking, "Okay, here we go. Now I got to have this conversation again. Like, don't sell when it's dropping like this. There's no need for you to weather the storm." But instead, they said, "It seems like a good time to buy," and that was, wow, what a proud son moment for me. I'm sure a lot of you have had that. You had that happen to you personally. I know I did. when I first kind of had that moment of Bitcoin is crashing, and instead of feeling that existential dread or was I wrong? Am I stupid? Should I not have, been stacking so hard? I thought, oh, wow, what a great time to buy. And when you see friends and family having that same reaction, people you love and care about, that is such a powerful thing. It's so meaningful because you know that they're starting to really get it. They're starting to really understand that, yeah, Bitcoin's going to have volatility, but at the end of the day, it's going to go up and to the right. Sorry, guys, voice is starting to give out there. So what we're going to do is go ahead and cut to a quick commercial break. When we come back here on RoxomTV, more news. We're going to also be joined by Adam O'Brien from the Bitcoin Well. So stay tuned. We'll be right back here on RoxomTV with more.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zapo Bank. The only way to bank your Bitcoin. Apply now at zapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Welcome back to RoxomTV, everyone. My name is Walker America. The price of Bitcoin is 64,477 infinitely printable Federal Reserve notes per Bitcoin. We're going to get into the second hour of today's show, where I'm joined by my friend Adam O'Brien, founder of the Bitcoin Well, wearing an awesome pair of blue light blocking glasses to make sure he can stay drowsy after this stream. Adam, how you doing, man?
Dude, I am good. With the amount of energy I have, I figured it's all I can do to just block all of the blue lights. And actually, the blue light rabbit hole might be crazier than the money rabbit hole. So anyone listening, I highly recommend the blue light rabbit hole.
Yeah, it really is. It's one of those tangential rabbit holes to Bitcoin, I feel. I remember I was at a dinner with some Bitcoiners once, and at the exact same time as the sun went down and the lights came up in the restaurant, 4 different Bitcoiners all put on blue light blocking glasses like simultaneously. It was an amazing moment. Just you love to see it. But Adam, so we've got we may have to get into the blue light at the end of the hour here if we have some time. But there's a few things I want to cover with you. I know you and I, you've been on this show before. We've talked as well on other podcasts before. Always like getting your perspective as somebody who's been in Bitcoin a lot longer than I have, has seen a lot of these different cycles, you've been somebody who's actively working toward Bitcoin adoption with your business, the Bitcoin Well, other ventures that you've had, other work that you do. And right now, Adam, I mean, the vibes continue to be weird. Everybody seems very convinced that Bitcoin is going much, much lower. The bears are dancing on Bitcoin's grave as usual. And I'm sitting here, I was just going through the River report that they just put out today, I think, about that there's no bear market from an adoption standpoint. And I'm wondering, just from your perspective as a Bitcoin business owner, if that's what you're seeing too. Are you seeing sort of this disconnect between price and also then what you guys are seeing on your back end in terms of, your customers at the Bitcoin Well, adoption more broadly with Bitcoin? Are you feeling that, or is everything feeling bearish from your perspective?
Yeah, I think it is an interesting time right now. From all intents and purposes, we should be seeing it's like green flags for Bitcoin. We've got all this corporate adoption. We've got Wall Street is here, the government's here. It's like this is what Bitcoiners have been talking about since day one. Imagine when there's what's the meme? It's like, oh, businesses don't use that. And then it's like, oh, well, companies don't use that. And then it's like, oh, governments don't use that. And then, it's like, oh, wow, Bitcoin is just the everything money. And so we've kind of got that now. We're like, hey, why is it flat, boring, and down? Like we're not really enjoying this. And so to answer your question about adoption, we are seeing our current customers stack harder than ever. I think that the Bitcoiners in the room are Bitcoining. I think that they are, more than ever, we are seeing a conviction amongst Bitcoiners, unlike anything we've seen, which is great. However, the ability to attract new customers is getting more difficult. It feels, again, a little bit like we're yelling into the void, if you will, or whatever that kind of looks and sounds like. There's this joke at Bitcoin Well. It's like our marketing dollars are wasted in a bear market and unnecessary in a bull market. It's kind of like when do you deploy your marketing capital? Because it doesn't seem to be it just feels a little bit like falling on deaf ears. The people that are with us, so you're at this point, I would say exchanges like River, Bitcoin Well, Strike, like all the big exchanges, we're kind of fighting for Bitcoiners at this point. We're not really in a season where we're going to be converting new coiners. And I think that distinction isn't that positive. I think it helps temper everything off. It helps kind of with some time preference. It helps really right-size businesses. But I think it's definitely a sign of the times. And I think, like I was kind of saying earlier, this green, I think it was a false green flag. I think getting Wall Street here, getting governments here, having this strategic, what did the states call it? A national digital asset.
Oh, there was the digital asset stockpile, but then there was the strategic Bitcoin reserve. They did actually have separate treatments under the executive order, to clarify. That was actually something I was pleasantly surprised about. It was, we will only hold, not sell, and potentially accumulate more Bitcoin. For the digital asset stockpile, it was, we will not accumulate more unless it's through confiscatory actions, and we will potentially sell it. So they did actually.
Okay. Oh, interesting. Okay. Well, that's
credit where credit is due. Credit where credit is due. Yeah.
Credit where credit is due. I think that's 100% agree with that. And so, yeah, I think like the fact that we're here showcases why Wall Street came. I think that Bitcoiners had this perception that it's like, oh, finally they're here. They're bending the knee. They've realized the superiority of Bitcoin. And really Wall Street was just like, oh, we figured out how to manipulate it. and we're gonna play some fiat games up until we have to bend the knee. I think they know that the bending of the knee is coming. I don't think the last 2 years were the bending of the knee. And so, yeah, I think as far as I can tell, and at Bitcoin Well in our customer acquisitions, we're still, I'm every month we're growing, and I'm always, and frankly, we're growing with the right customers today. We're seeing what a true baseline of growth can actually look like without the FOMO, without the guy that just comes in because you gave him a bonus and then never signs up again. We're getting good hard customers right now, which is obviously that's my dream. I just want to serve Bitcoiners, right? Like that's at the end of the day, it's like I'm not super interested in creating a business that is like the casino, in creating a business that doesn't empower sovereignty and freedom and generational wealth. And that's a very specific customer. And so it makes me very happy that that customer wants to use Bitcoin Well. I think that we're probably on paper a little bit isolated from like the bull and bear markets, because one thing I say about Bitcoin Well is that we're often somebody's second Bitcoin platform, not their first. I actually say we're their last Bitcoin platform because it's the last one you're ever going to need. But it's like a self-custody product is generally going to speak to people into their Bitcoin journey, not like someone testing it out in the Coinbase casino or something like this. So yeah, I think there's a bunch of rambling for you, but at the end of the day, I would definitely say we are in a bear market from a new retail coming on board. Bitcoin isn't as exciting as Claude or as OpenClaw, not as exciting as the next wave of AI and the next wave of, I think all that tech energy that was previously pointing to Bitcoin is getting pointed to AI, and all the like Bitcoin treasury stock energy that was getting pointed to MSTR and equivalents is now being pointed to AI stocks and Anthropic and these kind of AI conglomerates. So I think the energy has just shifted. The hardened Bitcoiners are still here, and but they're going to be, that class is going to be growing slower for the next months to a year, I would say.
Okay, there's multiple things I want to pull at there a little bit, Adam. And it was actually a perfect segue, unintentionally, because you didn't even know the story was coming up next. But we do have a story about OpenClaw, basically banning talk of Bitcoin. But one thing you said that I thought was really interesting in there was this idea that right now where we're at in the market, Bitcoin-only exchanges, right? Whether it be you guys, River, name any other one that's out there, Bull Bitcoin, Strike, right? You guys are sort of competing for the same Bitcoiner customer base right now, just because we're not seeing, like, there isn't that retail FOMO coming in right now, right? And that's not necessarily a bad thing. It just means, as you said, it's like, okay, you guys are going to make sure you have resilient businesses. You're going to keep doing what you do, which is not be a shitcoin casino offering prediction markets and now stock trading like Coinbase just announced and all these other things. You're focusing on Bitcoin. And I think that that's really powerful. I'm glad that there are highly principled Bitcoin only services out there, because I think people need them. And when they're ready, they will seek them out. But a lot of people just aren't ready. And one of the people, well, this will bring us right into our next story here, that is not apparently ready, is OpenClaw and their developer. So this OpenClaw basically just bans a contributor recently for mentioning the word Bitcoin. For anyone that doesn't know, OpenClaw, it's an open source AI agent framework built by Austrian developer Peter Steinberger. They've accumulated over 200,000 stars on GitHub since launching in late January of this year there. And this has signaled just massive developer interest in this. Now, this integrates with local files, browsers, terminals, messaging apps, external LLM providers like OpenAI and Anthropic, and it supports long-term memory, automation workflows, custom skills. Watch out for malware in those custom skills. But this recently, there was sort of a collision between this rapid growth of OpenClaw and general crypto and Bitcoin. I don't know why I quoted Bitcoin, crypto and Bitcoin. So during an early rebrand, some crypto scammers launched a fraudulent Solana-based token called Claude, which briefly reached roughly 16 million in market cap before crashing more than 90% after Steinberger publicly disavowed it. Good on him, and serves you right, scammers. He faced weeks of harassment, and researchers identified malicious third-party add-ons targeting crypto users, including attempts to steal private keys. So the response was a strict zero crypto rule on OpenClaw's official Discord. Contributor Clash D27 wrote, "Got blocked from OpenClaw Discord for saying that Bitcoin is a Bitcoin Clash D27 is a multi-agent benchmark where Bitcoin block height is just a clock. Mod 27. No tokens. Hypothesis. Can we pre-weigh intent? If attention is measured, we bring trust to OpenClaw agents." And then he asked, Pete Steinberg, unblock. Steinberger replied, quote, "We have strict server rules that you accepted when you entered the server. No crypto mention whatsoever in one of them. The policy remains firm. Any reference to Bitcoin, crypto, or blockchain triggers an immediate ban." Though Steinberger later offered to manually reinstate the user via email, so good on him. Supporters argue it's necessary risk control after a $16 million scam and ecosystem exploits. Critics are saying it suppresses legitimate technical discussion. But, it raises this sort of bigger point in question, which is despite the scams that are out there, Bitcoin, not crypto, is open source. It's decentralized. Should AI, open source AI agents refuse to even acknowledge this open source money that people are creating these agents? And Adam, I want to bring you back on for this. I believe I saw a picture. I think you have one of these set up. Is that correct?
Yeah. I've been playing with it for 3 weeks now, 3 or 4 weeks, I would say.
Nice. Okay. I do want to hear a little bit about that, but I want to also ask you on this because this is a story we've heard before. You've probably heard it much more than I have, being in this longer and seeing more of these patterns. But it's the Bitcoin gets conflated with every crypto scam under the sun. Bitcoin, which again, somebody saying like this user was literally saying like, "Hey, wouldn't it be cool if we used the Bitcoin time chain? This sounds like a pretty cool idea. There's no token involved. There's no scam. You're just saying, hey, let's use this real measure of time that Bitcoin provides. Wouldn't that be neat?" He's not trying to scam anyone, but he mentioned it. At least the guy reinstated him later. But to me, this just screamed like this is just classic. It's people in crypto scamming, and then all of that getting sort of affiliated with Bitcoin unfairly. What does it take for this to stop, Adam? Will people ever finally realize, like, look, these two things are separate, or is it just like, do we have like decades to go before that's the case?
Oh man, yeah, I think the bear case is decades. I don't think it's quite decades, but certainly the Overton window on Bitcoin is moving. And if you think about Bitcoin's history, you've kind of like when I got into Bitcoin 2013, people asked what I did. I started the business in 2014. Or 2013 officially, but then 2014 like formally. In 2015, 16, people asked what I did. I'd always preface with, "Oh, have you heard of Bitcoin?" And I'd say like 80% was like, "No, what's that?" So then it goes into like the explanation of Bitcoin. Then 2017, 2018, "Have you heard of Bitcoin?" I'd say it's like, the majority are saying yes at this point, but it's still kind of a preface of a question to have you heard about Bitcoin. Then 2020, that qualification goes away. It's no longer have you heard about Bitcoin? It's just I work in Bitcoin. And then, and still now, the conversation is, "Oh, I own some ETH too." And I'm like, we are not the same. That's not what I said. I don't work in ETH. I create freedom technology that allows for freedom money to be self-custodied. And so you can replace your bank with Bitcoin. Well, with Bitcoin in your self-custody wallet. And they're like, "Well, what's the difference?" And then you go into the qualification. And so maybe you could qualify that as the question being, do you understand Bitcoin? Or do you understand the difference between Bitcoin and crypto? And I think we're probably we're on the downslope of that just because people are starting to wake up. Like the Overton window is the word I keep coming to. It's just blowing open with content, with this type of content, with, you look at like Sessions, you look at Simply Bitcoin, like these are good quality media companies that understand the importance of Bitcoin only. And I think that the newcomers are finding these massive channels and they are getting properly orange pilled very quickly, which is good. And so I'm bullish that will help continue. And I think every single season we get people wrecked by the crypto scam, the Solana scam, the Fartcoin scam, the Hawk2a scam, all of it. All of those people are like wounded. And it's those wounded soldiers that are going to be hopefully like bringing up the next generation of Bitcoiners to help people understand, hey, I understand why I got wrecked. I understand that it was a combination of my time preference, lack of research, and a strict difference in the protocols, who controls it basically. And yeah, so I think we're on the tail end of it, but man, is it frustrating. Every single conversation turning into basically trying to explain to people why ETH and Bitcoin are so much different, and why, while both go up in value against a failing dollar, like also, you know, chairs go up in value against a failing dollar. Like, you know what I mean? Like, you know, boats go up in value against a failing dollar. Like all of these consumable products go up in value against a failing dollar. That's not the measurement here. The measurement is freedom. The measurement is, are you beholden to somebody else that gets to call the shots? And I think this is where the people are opening up and realizing we've been through 3 generations of government controlled money in the way that it is today. 1933, you know, we get Executive Order 6102. And from that point to today, so almost a century, we've had money centrally controlled by the governments. And you could argue even 1913 in the Fed. But let's just say, like, on the macro, 1933. And so for 3 generations, we've had people growing up being able to trust that central authority, or at least not really seeing their day-to-day impacted in that trust. Sure, life was getting more expensive, but you know, it was all happening so gradually, all happening so slowly that it was kind of unrecognizable to the eye. My assets were going up, my wage was going up, maybe the meat's going up, but hey, it's all good. Everything's going up. It's no problem. And then we've seen enough blips now where there's at least some shaken trust in the system. There's some shaken trust in the structure. And we're realizing just because daddy government says it's so, or just because daddy banker says it's so, doesn't necessarily make it true. We watched Silicon Valley Bank collapse. Well, I think we watched dozens of banks collapse in the States over the last few years. We've watched crypto exchanges collapse. We're seeing financial products fail for, you know, not the first time, but like, it's kind of reminiscent of '08 and you know, and I don't know that we had many like massive broad scale failures before that. And so I think that these cracks are turning into like serious, I say the fractures are turning into cracks and serious cracks and foundational cracks. And for that reason, people, and I think our next generation, our kids, are going to be investigating, and credit to Gen Z too. They're also not willing to trust blindly anymore. My generation was brought up like, just trust the system, go to school, the government has your back, don't worry about it. And I'm here and I'm like, that's never been true. Look at the history. And I think because of the rise of the internet, like our generation, millennials, we're a little bit looking at things like, don't trust everything you see. That's kind of something we had to be taught, and something we had to be, you know, hey, remember, not everything on the internet is real. Like you had to that was like something that we had to wrestle with. I think Gen Z is the other way. They're growing up in an age of AI. They're growing up in an age of like headline clicking and clipping and all this kind of craziness. And so they're already used to needing to investigate things a smidge, and they're not taking things at face value. And they're also in one of the most decentralized financial economies in the world. For the first time, you know, commerce is digital, money is digital, labor is digital, everything is digital. And we've got these digital natives growing up with a lack of incentive to trust, and actually proof that they shouldn't trust. And I think that generation, as we see them mature and grow into the workforce and grow into the you know, the dominant generation, I think that we're going to see this crypto Bitcoin distinction just finally get like, yeah, evaporated. It's going to be in no uncertain terms will people understand Bitcoin is sound money designed for freedom. Crypto is largely a unregulated penny stock casino that anyone can participate in, and that nobody other than the founder of those tokens controls. And I think that distinction is clearer to more people today than it was 5 years ago, and will be infinitely clearer in 5 years.
It's such an interesting point too about just the generational differences. And I'd be curious if you think like the fully digitally native generations, because we were not, as millennials, we weren't fully digitally native, right? We were the crossover generation.
Yeah.
We saw both. We remember a pre-Wi-Fi time. We remember dial-up and DSL, right? We didn't have cell phones from the moment we came out of our mother's womb. It was like my first phone was when I was 16 or 17. It was a Motorola Razr, so like, and like texting was like just becoming a thing, and it was really expensive to do. So you really didn't do it too much.
Dude, like, just to cut you off there for a second, yeah. I remember my first phone plan. So I've been working since I was 12 or 13. And one of the first things I bought was a cell phone. And my dad came with me, obviously, into the cosign thing and whatever. And in the phone plan, I got 2,500 texts. And my dad was like, this is outrageous. You're never going to use 2,500 texts. You got unlimited calling, you got voicemail. Like, why on earth would you ever text anybody? And I think I blew through that in like 10 days or something, like outrageous. And he was like, who are you texting? Like, how are you having conversations just, like this? And here we are 15 years later. And it's literally, I mean, I would rather have a phone plan with no phone number. I would rather just have texts and voice notes when I need it. And that's probably actually the future of the way things think. Like my OpenClaw doesn't have a phone number. It has a voice note, a whisper, protocol adoption. And so it's like the future is certainly changing. And yeah, anyways, I think that's so interesting. Continue though about the generation.
No, it is such a funny thing. Like if you say that to somebody today that like, oh yeah, like you had a limited number of texts on your monthly plan. They're like, what do you mean? Like, isn't that all like, that's all for like, it's like, no. That I don't know how to explain this to you, but it was limited and people did just call instead of texting. It was a thing, but I'm curious what your take is on just generationally. And this is just your, opinion on this. What do you think? Gut reaction. Do you think there's a better understanding of the Bitcoin versus crypto split as you go from older generations to younger? Like, are the boomers more likely to just say all of that crypto hootenanny? And meanwhile, like, or is it maybe, are we the millennials the most enlightened? Is that what it really is? We're the ones who understand it best. What do you think?
Well, I think naturally millennials are the most enlightened generation and that there ever has been and probably ever will be. And so, I mean, listen, that's just facts, okay? There's nothing you can do about that. But ignoring all those obvious facts that the millennials are the supreme generation on the planet, I think that there's this interesting theory that I have noticed. I read about this 5 or 6 years ago, and I've been aware of this as I've entered into my 30s. But it's that there's kind of 3 different periods in your life that you go through when it comes to adopting technology. You've got the first period when you're born. And when you're born, everything that's in the world is like normal. This is just how the world is. Somebody born today is just like, yeah, the internet, yeah, AI, yeah, crypto. Like this is normal. All of my kids are just like, this is, devices, screens. Like this is the norm. We had to obviously censor all of that, and our kids get 2 hours of screens a week, and they're much better off for it. But that's an aside, and I'll leave my humble brag parenting for a different time. And then so you're born up until you're 10. That's kind of period 1. Then from when you're 10 to when you're about 30. You have this period of adoption, and there's obviously new technologies coming in, and this technology, you're more susceptible, you're more receptive to it. It's kind of like, what is this newfangled toy, this new technology? I'm interested. Let me learn about it. I'm curious about it. I'm ready. I'm willing. I have the energy to spend. It probably behooves me to spend some energy to learn this because it's not going away. For me, that's certainly like the internet and things like this. Bitcoin, I was very excited and ready to adopt. Even AI to an extent, self-driving cars. Like we've actually had an insane run for the last 10 years, 15 years for technical advancements. But then this weird thing happens when you turn 30. It's about 30. Maybe I'm 33 now, and so not 30 for me yet. I pride myself on like finding new things, but around that time frame where everything that's introduced into the world is foreign. It's bad. It's not the way things are supposed to work. I no longer have the energy to spend investigating or researching or learning or understanding. And so to your point, Like when you're 60, if you haven't been exercising your adoption muscle of technology, when you're 60 and this newfangled internet money comes out, like, yeah, you're not going to spend the time to research it because you've kind of like become this sedentary, your adoption muscle becomes sedentary. And I think that's a miss that we have. And I think that's actually why generations are designed in the way that they are, because the young people are supposed to keep the old people young, and the old people are supposed to pass down their mistakes and their wisdom to the young people. This is kind of the trade-off that we get. I love hanging out with young people because I get to stay young. And when I was younger, I loved hanging out with old people because I got to just leech all that wisdom out of them. And I was like, hey, just so you know, when I did this move that you're about to do, I lost a ton of money and lost some friends and lost some whatever. And it's like, oh, sweet. Thanks for the heads up. I'm going to do it anyways because I'm young and arrogant and, and an idiot, but thanks for the heads up anyways. And I think for that reason, kids coming up today naturally research, whether they know it or not, naturally adopt new forms of tech faster than the old people. But there is still that wisdom there. And so if the old people are humble enough to, listen to the young generation and have that adoption, they're going to be the ones that ultimately win because they've got now the adoption brain and the wisdom brain working for them. But it only comes with humility, which is funny enough, something that Bitcoin kind of just naturally brings about your life. So yeah, I think to sum up, yes, the young people are naturally understanding that a little bit better. But I do think the old people are catching on because they're the ones that have the most to lose. If the system collapses, like it's the boomers that get cooked. Modern medicine, health and stuff. If you're 60 years old, you got 20 to 30 more years left of like pretty good living. And if you're staring at 10% inflation with a 6% market, that's a problem. And especially if you thought life was going to get better as you got older, especially if you wanted to not have to cook your own meals when you're 87 years old and not have to cut your own grass. And if you thought life was going to get better, which means naturally increased costs, and you're looking at 10% inflation with a 6% market, you got to figure something out. And so the ones that see that, do that math, they're going to be the ones that ultimately, I think, thrive out of this.
I'm very bullish on Bitcoin boomers because they're some of the most based people, and talk about an openness to new things. Shout out to if you're a Bitcoin boomer listening to this, I appreciate you. You are an open-minded person who has just done exactly what Adam said, which was stay curious and be humble enough to accept that you don't know anything. And the point is that gets harder to do the older you get, not by anyone's individual fault, just because that's how it naturally is. It's harder to accept that there are things that you just truly didn't understand for all this time, like money. I mean, so really Bitcoin boomers, you have a different level of enlightenment. That's why I always like to set aside Bitcoin boomers and fiat boomers. You know what I mean? They're a different class of people. I want to make sure I give shout outs to the Bitcoin boomers who are out there. We appreciate you. Adam, we are going to take a quick break here. When we come back, there's another story that I want to get your thoughts on because you were talking about ETH earlier, talking about all the confusion around ETH when you've talked to people, and this has been there for years. And we just saw that yet again, Vitalik Buterin is selling ETH. He never seems to buy it. He always seems to sell it. But then again, I guess that's what you do when you pre-mine it, right? So we're going to take a quick break here on RoxomTV. Then we'll be right back with Adam O'Brien from the Bitcoin Well to talk about why ETH is the mother of all shitcoins. Stay tuned. We'll be right back.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zapo Bank. The only way to bank your Bitcoin. Apply now at zapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Welcome back to RoxomTV, everyone. I'm Walker America here with Adam O'Brien from the Bitcoin Well. The price of Bitcoin is $64,385 infinitely printable Federal Reserve notes per coin. Who's counting, though? I am. We're going to jump into our next story here, which is around Ethereum founder Vitalik Buterin selling ETH again. So I bring this up too because Adam was just talking about all the confusion that he's had to deal with for years when talking about Bitcoin and people bringing up Ethereum or insert other shitcoin. So recently, on-chain data from Arkham Intelligence showed that wallets attributed to Vitalik Buterin have recently transferred and sold ETH. Shocker. Including roughly 1,869 ETH, about 3.6 million, over a 2-day window. During that same stretch, Ethereum traded from roughly 1,988 to 1,875, about a 5 to 6% decline. Previously, Arkham tracked flows showed a larger disposition of roughly 6,900 ETH, around 14 million, during a broader market slide from about $2,360 to $1,825, about a drop of 22%. ETH, of course, trades billions in daily volume somehow still. But when the network's co-founder is a known seller and the wallet is publicly tracked, the market reacts to that signal in a very structural way. And, that's the key difference here between Bitcoin and ETH. I mean, there are some other ones too that we can get into, but Ethereum operates with identifiable leadership and an institutional backbone, including the Ethereum Foundation. It's a Swiss-based nonprofit that funds ecosystem development, research, and grants. The structure enables coordination, but it also means there are treasuries, insiders, and known entities capable of discretionary selling. Humans exist inside this monetary system and do have some degree of control over it. You contrast that with Bitcoin. Satoshi Nakamoto, the creator, is estimated to have mined roughly 1 million Bitcoin in Bitcoin's first year. Those coins have never moved. Not in 2013, not in 2017, not in 21, not in any crash or rally since. There's no foundation treasury. There's no executive leadership, no visible founder wallet that traders front run, no marketing team either. We're all the marketing team after all. But Bitcoin removed the human cell pressure at the origin layer, and that's why this matters. When markets get volatile, founder-led crypto projects, which are all of them besides Bitcoin, inevitably reflect human incentives, diversification, funding operations, and treasury management. Bitcoin structurally eliminated that variable because there's no CEO to panic. There's no foundation that needs to rebalance. There's no roadmap committee adjusting monetary policy. ETH. Now, one system depends on identifiable people. There is a throat to choke for all of these. Pressure can be exerted on people who control that blockchain. The other, Bitcoin, has been minimized from day one. And this isn't just some philosophical difference in a stressed market, especially. This gets down to the actual monetary architecture and why it matters. So, Adam, I want to get your take on this, because again, there's still, as we were just discussing, still so much confusion about Bitcoin versus crypto. And when it comes to all of these, one thing I try to just drill home to people if they ask me, like, what's the real difference? Like, isn't, Bitcoin's a cryptocurrency. So isn't there, and it's like, Bitcoin is the cryptocurrency, right? But also the one of the key points, leave all the technicals aside. We don't even need to get into the weeds there because most people don't want to hear it. One has throats that can be choked at the top who control direction, and one does not. There is no single throat to choke. You got to choke a lot of throats all over the world. And even then you're not going to do anything to Bitcoin. But like, we see this, Ethereum has this roadmap that what is the merge, the purge, the splurge, the scourge. I don't even know how many urges they have. There's a lot of urges coming from Vitalik Buterin, apparently. But they've changed that roadmap many times. We've also seen from when Ethereum switched from proof of work, which it was, to proof of stake, and the response, the price action since then, the market was speaking, saying, look, this isn't tied to the real world anymore. This is just fiat on steroids. But what's your read on this? Because, I mean, as Vitalik Buterin, did he even, presumably he mined Ethereum, but he also got a massive pre-mine allocation, right?
Yeah, I don't know all the specifics of how it worked. I know there was a pre-mine. I know there was a pre-sale. And then I know there was, cheap ETH to be had, which I think in fairness, like, mining token early, you're still spending energy, and I think that's probably fine. I think the pre-mine and the pre-sale is kind of where the problem lies. The centralization is just the problem. It always has been, it always will be. When you've got centralization like what we see in the ETH protocol, Solana, all these guys are trying to be better than Bitcoin. But in trying to be with speed, I think that they all LARP at Bitcoin because it's not fast. But I think Bitcoin's like pretty fast, and I think that there's enough. We're reducing settlement layers on a fake monetary system from weeks to minutes with Bitcoin within the Bitcoin protocol. That is, and we're building a minute settlement layer or 10-minute settlement layer inside of a real foundational monetary system. And I think that already is such a massive improvement over legacy fiat. And I think that the incremental improvement from minutes to seconds is not worth the incremental sacrifice of security. Because at the end of the day, the security implications of having throats to choke, as you put it, are massive. We've seen what throats to choke can and will do across, nations, across markets, across even like you look at the school system, you look at the medical system, you look at the food system, look at what the throats to choke give us. We've got a broken world. And when you give someone a throat to be choked, it will be. This is why, and this happens in Bitcoin. This is why I'm so anti-custody. This is why I think it's deplorable to leave your Bitcoin up to a throat to choke. I mean, are custodians much safer than holding it yourself? I would argue no. They're actually more harmful, simply because you've introduced a new throat. You've included your coins in a massive honeypot with a throat to choke. And so I think our money should have limited throats to choke. We should look at rules and not rulers. I love that saying. It completely right sizes the mindset. When you have a set of rules, you can agree whether or not you want to participate. When you have a ruler that is changing the rules, you have to question incentives, which is like a tricky thing to do with for most people and in most circumstances. But forget questioning incentives. You have to always be adapting to a new set of rules that may or may not come to pass in the future. If life, sports analogies are pretty easy to comprehend. Imagine trying to play a football game, not knowing what the rules were going to be at the end of the game. Like it would be impossible. How much are touchdowns worth? How much are field goals worth? Can I have, 10 people on the field, or can I have 15? Or can I only have 3? How big is the ball going to be? How wide is the field? Is a first down still 10 yards, or is it going to be 5 yards? Or is it going to be 30 yards? Like, what's a penalty? How can you possibly strategize, build a team, and plan for a game where the rules are constantly changing? And I think that we've got money today, fiat, where the rules are just constantly changing. And you've got ETH and the host of other tokens with a bunch of rulers that just change the rules. And having a monetary policy or a system or a protocol where the rules are set in stone and it requires an immense amount of energy and commitment and dedication and voting to change those rules is a feature, not a bug. And ETH exists there's some lore about the history of ETH, which we can talk about in a second, but ETH exists to solve the feature of Bitcoin, speed and centralization. It's like, oh, this token is too decentralized and the monetary or the settlement time improvement was only 90%. We can do better. It's like, no, you can't. There is no better way. You don't need more than 10-minute settlements if it comes at the sacrifice of the rules. And many people don't know this, but Vitalik, like, he wanted the ETH network to run on Bitcoin. His vision for this like Internet of Things type of monetary layer, the original paper had the Bitcoin token being the monetary foundation that runs it. It was Anthony Diorio that kind of like got a hold of him and was like, dude, do you know you can make billions of dollars if you just invent your own token? And, whether or not Vitalik was like, a part of that at the beginning or not is to be determined. But from what I understand, and I know this secondhand, so I haven't talked with either of them about it, but it's a very clear, from the beginning, there's a very clear use case that the Ethereum network might solve. Nobody buys the ETH token because of that use case. Everybody buys it because they have the perception that some other idiot's going to buy it in the future for more. And I think that's the main problem. If you own ETH and you can't explain to me what you're going to do with that ETH, that's a problem. I can tell you very clearly, I'm going to pass Bitcoin down to generations so that my future bloodline can continue to save in a protocol that protects wealth. You can't say that of ETH. That would be disingenuous. And so the reason you own ETH then should be because you need it to run on the Ethereum network. And there are no real good use cases for that in 2026. And so it's a number go up game. And frankly, there's just better assets that push number go up than ETH. Like, yeah, most of them, and they're not morally corrupt. So it's kind of a losing battle at this point.
Well, that's the whole thing. If from the ETH side, it's always, well, the utility, all the utility and all the smart contracts and everything. It's like, okay, so you just need ETH for gas then. Let's not try to pretend that ETH is actually any sort of a store of value or use it like workable medium of exchange in and of itself. You're using it to build all these other different, financial markets on top of that, and you're using it as the gas to pay it. But then, so it just has, of course it's far overvalued right now because that's really all you're going to use it for. Like if you want to store a value, you would get Bitcoin.
Yeah.
If you want to be able to build something on Ethereum or use something on top of Ethereum, okay, do whatever you want with your money. I don't care. But like that doesn't demand a monetary premium, right?
No. And the way I used to describe it is when you buy ETH, you're buying a gift card to a network that may or may not be useful in the future. And frankly, ETH is not even the one to bet on. If you're betting on this like future of dApps and apps that run on a monetized layer of the internet, that could be a good bet. And with AI, needing a layer, needing a network to transact on, we have to kind of throttle that somehow. And so introducing a cost layer to like it, there is a world where the IP protocol, like the internet protocol that we know and use today, just gets absolutely blasted, and it's far too centralized for us to do any type of like relay system. And so the internet as we know it could just disappear, and we may need to throttle. The internet could become pay-per-use at some point in the future. And so in that, it could make sense that we'd have a network that needs to run on. But it won't be ETH, because ETH is somehow, if Bitcoin did everything perfectly, which I believe it did, where it's so decentralized that it's safe, but there are mechanisms to keep it secure, and keep it adaptable so that, like the quantum FUD can be easily disproved, and all the, like we had the hard fork and all this stuff. Those are all features. And so if you took that and opposed it with ETH, you'd get something that's somehow too centralized to be safe, to have all the benefits that we have with Bitcoin, but then also weirdly decentralized to make it not very fast. It's all about the mindset you're approaching a network with. If you approach the Bitcoin network, you're not getting this super speedy settlement layer, but you're willing to accept that because of the immense security benefits and generational wealth benefits that are included in that settlement layer. If you're going to ETH for speed, you're just going to be running to like a faster blockchain, a faster network at some point in the future. And so it's kind of got this weird, awkward problem of like, yeah, it's this awkward middle stepchild that doesn't really have a utility, absolutely has no store of value. And you're really banking your generational wealth on the promise that may or may not be useful in 10, 15, or 20 years. Like, good luck.
Yeah, it's not something that I would be doing personally. Do what you want with your own money, but boy, that's an interesting proposition. One of the other things that's always frustrating around the crypto folks when they try to rag on Bitcoin is like the too slow thing, because it's always like you ask them, have you used the Lightning Network? Well, no, but it doesn't work. It does. Have you used it? Well, no, but it's still, it needs to be done on layer one. It's like, no, it doesn't. Why? Why would you need to do that? Layer one needs to remain decentralized and secure. But they won't use it, because if they used it, they would no longer be anti-Bitcoin, right?
That's such a good point. And to your point earlier, you're like, oh, ETH smart contracts. And then like Lightning is literally a smart contract built on the Bitcoin network that solves the settlement time. And they're like, no, that could never work. It's like, isn't that like credit, smart contracts? Those are like, that's cool innovation. Smart contracts just could have and are now done in Bitcoin, on the Bitcoin network. And so, yeah, that is a really funny like value prop, and just goes to show how, and I actually think Bitcoiners are at risk of this too. You've got these ideology camps that form. I think like the most heinous ones are religious ideology camps, but Bitcoiners are kind of heading in this direction where you kind of stop thinking because of the hive mind, because of the group think, and you kind of start. And we saw this play out. Like everyone had an opinion on core versus knots, and I think people were blind. Like both core and knots have merit. It's impossible to take a position 100%, in my opinion, on either one being you can argue for a better solution over the other one, but you can't argue that it's objectively better because of the different filters and formats. But we kind of created these two camps. You're all this, or you're all that. And I worry that the ETH tards have done the same thing, where they've kind of created this camp for themselves, and they are just forcing themselves to ignore the benefits that Bitcoin provides because of their hive mind, because of the camp bias, if you will. But I really fear that Bitcoiners could be doing a similar thing. I mean, even more than core versus knots. We saw the treasury like somehow, and like I just call it as I see it mostly. I try to, because of like I'm a follower of Jesus, I'm a Christian, And people have all these preconceived notions about what that means before I even talk to them, and I hate that. And so as a result, I very strongly form opinions based on my own research, my own desire, my own filters, my own whatever. And so when I see the treasury companies, I'm like, hey, this seems like a cool fiat product, but it doesn't replace real Bitcoin, this, and this. And people are like, oh, you must not love Bitcoin because you don't love treasury products. And it's like, whoa, I didn't say that at all. I just was highlighting the danger in treasury products. And then there's other Bitcoiners that are like, treasury products have no place. And it's like, well, they could solve like the captured structured debt problem that, they were kind of introduced as like the Trojan horse. That's like a reasonable thing that they could solve. There's captured money. You may as well have the captured money exposed to the good money. But just heads up, there's centralization risk there. And then so there's like, you just have to, I don't know, my opinion, you gotta be able to look at things from all sides and then form the objective opinion. The objective opinion is that ETH is useless. But the reason the ETH tards can't see that is, I think, a canary in the coal mine for what Bitcoiners might not be able to see in the future. And I think we should watch out for that.
I think it's a fair point, and I reject the camping of people. The forced duopoly, basically. If you're not with us, you're against us. Like, come on, guys. That's like, and I'm speaking about Bitcoiners specifically here. Like, that's just like political slop. You're just letting political slop tactics be used against you. There is not like, you want to make, the only way that it's becomes an us versus them is if two different sets of consensus rules emerge. If there's a chain split, then okay, we're not talking, like right now we're all Bitcoiners. If consensus rules change and then there is a split, that's a different story, right? Now we're talking about a different thing. But throughout this whole Core Knot saga, it's like, look, guys, we still all have the same consensus rules. You may have a different relay policy. You're still a Bitcoiner, just like I am. That's okay. Like, we don't have to agree on everything. We don't have to agree on the solution for everything, whether that solution requires immediate action right now to stop it because it's an existential threat. And if something's not done, it's going to be the end of Bitcoin or not. Like, you can believe whatever you want to believe. If we're still running the same Bitcoin consensus rules, we're both still Bitcoiners in my book. Like, you're still on my team. We just disagree. You're not always going to agree with everybody on your team. That still means that, you have the same long-term goal, which is Bitcoin's continued success. You know what I mean?
100%, man. And I think too, you don't want to agree with everyone on your team because then there's like, the world is big and the world is changing. And the smartest people I know and the ones that I try to model myself after are the ones starving for feedback, starving for new information, and humble enough to gather new information and make a different decision with that info. I think that's just the holy grail is being so humble that you get to be on a constant pursuit of info, and then so self-aware and so sure of yourself that your identity is not rooted in your opinions or your beliefs. Because, and I say this all the time, and I mean it wholeheartedly, when you show me a better asset that can preserve your wealth generationally, that is not at risk of seizure due to like centralization or like physical barriers, I'm done with Bitcoin. The second there is an objectively better asset, I'm out. And I will happily own the new information, and I will be the biggest proponent of that. And if I get it wrong, I want all the Bitcoiners to come and shake my head to pieces and be like, dude, you got it wrong. You're missing info. And then I'll be back. I'm not some camped bot person that just gets to, have an opinion one time and then that's the way it is forever. I'm like 100% committed to the pursuit of objective truth. And that feels like the best way to operate because I'm on the constant hunt for new data. And sometimes I'm sure I'll make wrong opinions, but then you can be damn sure that when I make the wrong opinion and I get the better data, I'm going to make the right move. And I think that's kind of the important thing that just humans generally, societally, generationally, we need to be kind of like on the watch out for.
No, I love that. And we're running up against the end of our time. I did very quickly want to hit just one last abbreviated story just to get your quick take on it as it speaks to kind of larger market dynamics. And then I'll let you kind of send people where you want to. But first, I don't know if you saw this, but BitDeer, the Bitcoin miner, just sold its entire Bitcoin treasury, essentially. So they had something like 2,000 Bitcoin held at the end of the year. They produced just last week, they produced 189.8 Bitcoin, and sold that full amount. They've liquidated their remaining 943 Bitcoin. And they're basically saying they're trying to, they're evaluating multiple non-binding powered land acquisition opportunities. They want to prepare liquidity. They say their hash rate's going to continue to grow. They'll continue to mine more Bitcoin in the interest of their shareholders. But they're also looking at sort of this AI pivot. I think they'd already started some of that. They want to support AI cloud services, hardware development, general operations. That's what we use the funds for. What's your read on a lot of these miners sort of making either a full or partial pivot to the AI space? I mean, is this just kind of natural and okay, they've already got access to massive amounts of power? So yeah, if they're going to be able to be more profitable by pivoting part of their operation to AI, they're going to do it. And we're going to see that. Do you think that'll accelerate, or are we at kind of this like gold rush moment that a lot of people are seeing in terms of capital flowing into AI? They're trying to capitalize on that, but ultimately a lot of them come back to more Bitcoin mining, not less at the end of the day.
Yeah, hard to say. I probably subscribe to the idea that mining Bitcoin is less profitable than giving hash power, if you will, to AI. I think though that will change. There's got to be a calc. I think there's kind of a micro and a macro function here. The macro function is that there's all of a sudden a new energy competitor in town. Now, what does that mean? That means previously Bitcoin was the like golden goose for you had extra energy, mine Bitcoin. Now, at least from an institutional perspective, there is a golden goose for institutional energy, which is selling your power, your data, mining abilities to AI. So macro, this is going to incentivize more people to be doing more research into better energy production. What that means is us, the consumers, trickles down so that we are going to have a better way to produce energy with the sun and with, not the wind. Wind is never a viable form of energy creation, but the sun probably is. And so if we could figure out ways to harness that better at the institutional levels, that'll trickle down to the consumer level, which means consumers should, in theory, have such good energy technology from the sun that Bitcoin mining at an individual level, at a personal level, should become a lot more advantageous, which hopefully eventually has a net increase and a net decentralization to the hash power. Because frankly, it was getting a little bit concerning how centralized the hash power was getting with the different pools that were turning on. Nowhere near alarm bells, nowhere near even the canary. But definitely like spidey senses, the hair on your back kind of goes up. And so I think once again, Bitcoin's perfect incentives of tying money to the real world will prevail. Frankly, I think competition for power is good. It might be a short-term, like, oh, this sucks. There's, miners are turning off their miners. The hash rate is going down. But I do think that we're going to be on the rise of an energy boom because of AI, people mining for AI, so to speak. I know that's not like, what you guys understand what I'm saying. And I think that because of that, it's going to trickle down to massive individual benefits.
I think it's a fair assessment. There's a lot more we could dig into there, but we are running up on the end of your time here, Adam. Thank you so much for joining us here today on RoxomTV. Where do you want to send folks so they can either follow you, check out your business? Where do you want them to head?
Yeah, go to bitcoinwell.com, sign up for an account, and then please hit me up on Twitter at Adam O'Brien and tell me everything you hate. We are going through this period right now of just optimization. We've grown so fast. We have over 70,000 customers at Bitcoin Well now, which is an insane number that I just can't even believe that. And that's like insane growth. And so I want people, the Bitcoiners, the hardened customers who I want to serve, use the platform, tell me why it sucks, and let us get in the lab and fix it. And so, yeah, go to bitcoinworld.com, sign up, make an account. Probably I have a ref code. If you use the code Adam, probably something happens to your account. I actually have no idea, but we have like a fun game where you can win sats. Of course, they go to self-custody. Probably you just get extra chances at that game. I should probably clarify that, but bitcoinworld.com, use the code Adam. You're going to get a bunch of cool things, I'm sure. And then hit me up on Twitter and tell me why it sucks, and we will make it infinitely better.
Love it. So maybe it gets you a full Bitcoin for free if you use that code, perhaps. You can say.
Yeah, sure. We'll say that, and then hit me up and call me a liar if it's not the case. You actually, so the real prize, you can win up to 1 million sats, and so you can win up to 1 million sats. Another prize for 500k sats. Then we have some prizes like from 0 to 210k sats. So there is some real coin, and guess what? It's sent instantly over the Lightning Network by some type of magic, because somehow the Lightning Network works and we didn't need ETH after all.
Who knew? Well, Adam O'Brien, thank you so much for joining us here. Great to have you back. Looking forward to doing it again soon. In the meantime, folks, we're going to take a quick break. Then we'll be back with Isabel, Fox, and Duke to talk about Bitcoin and quantum. Stay tuned. Thanks again, Adam. And thank you guys for watching. You got one more hour here with me on RoxomTV. We'll see if my voice holds up. But again, we'll go to a quick commercial break, and then we will be right back. Stay tuned.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zapo Bank. The only way to bank your Bitcoin. Apply now at zapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Welcome back to RoxomTV, everyone. I'm Walker America. We're in the final hour of our 3-hour marathon here every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time. The price of Bitcoin is 64,446 infinitely printable Federal Reserve notes per coin. We're going to bring up our next guest, Isabel Fox and Duke, in a moment. But first, we're going to go ahead and just give you a little bit of a background on this story as Bitcoin prepares for a quantum future. So on February 11th, Bitcoin developer Mark Ehrhard, aka Merch, who we recently had on the show a couple of times, posted BIP 360 Pay to Merkle Root was published. Authored by Hunter Beast, Ethan Haleman, and Isabel Fox and Duke, not Merch, the proposal has now merged into the official BIP's repository, formally entering the review pipeline for Bitcoin. Now, it's important because with recent quantum FUD making the rounds and making the rounds again, this represents an early structural step toward hardening Bitcoin against potential long-term quantum computing risks. BIP 360 introduces Pay to Merkle Root, a proposed output type that removes key path spending and reduces public key exposure on chain. Today, Bitcoin relies on 256-bit elliptic curve cryptography, secure under current computing assumptions, but theoretically vulnerable to a sufficiently advanced quantum computer running Shor's algorithm. This is not an activated upgrade. The merge simply opens formal review and technical discussion. Any consensus change would still require broad agreement across developers, miners, node operators, and the economic majority securing the network. The bottom line here is that quantum computers capable of breaking Bitcoin do not exist today, but Bitcoin developers are thinking decades ahead, proactive, deliberate, and unfazed by the hype and the FUD. Now, the co-author of Pay to Merkle Root, Isabel Fox and Duke, is going to be joining us right now on the show today to break this down, share some more insights, and talk about what this actually means for Bitcoin's long-term security. So, Isabel, welcome. How are you doing today?
I'm doing great. I'm here at the space in Denver, really awesome Bitcoin co-working community space. And I'm with the BIP 360 team. So we're kind of getting prepped for all of the various proposals that we hope to put forth to harden Bitcoin against, again, a theoretical or possible quantum computer in the future.
I love it. I've wanted to go to the space quite a lot too. I've not been able to make it out there yet. I may just have to soon. It is on my list. So maybe where I want to start here is just if you can give kind of an overview. You know, I covered some of the stuff very high level there, but you know, what was the impetus for this? Was this being worked on prior to the most recent round of sort of quantum FUD that has been permeating the discourse, or was this sort of a response to it?
So it was definitely being worked on before this like huge wave of quantum FUD that I feel like we're currently experiencing in Bitcoin right now. And we can talk a little bit maybe about kind of why that happened and the influence of folks like Nick Carter and other people who have like really been bringing this issue to the fore lately. But this was a proposal. This proposal has now been being worked on by Hunter Beast in particular for about 2 years. So it's been quite some time. And when Hunter first kind of started thinking about this and started putting forth on the Bitcoin mailing list proposals for how we could potentially quantum harden Bitcoin, not as many people were talking about it for sure. There was not nearly as much concern about quantum computing as there is now. There have been some very minor advances in quantum computing and sort of the industry of quantum computing since then, which I think maybe sparked a little bit of this new interest in this topic. And then, of course, again, kind of big thought leaders in this space. Nick Carter is like the kind of penultimate example, I think, of really sort of like blown it up in the past like 6 months in particular. But yes, this has been something that has been being worked on for quite some time. But the BIP, in response to, technical discussion and sort of community review, has evolved quite a bit over the past 2 years. So there's been quite a bit of movement on the technical front and sort of rethinking how we address this problem as a developer community.
Yeah, and I think this is really important to point out that there was all this talk, and not to single Nick Carter out here, but he's been a very vocal voice about this. And I'd like to believe he is well-intentioned. He's been actually a very great advocate for Bitcoin, a very great FUD buster in his own right for many years, right? So not knocking that. Not sure what his intentions are. I know he's publicly disclosed he has, investments in various startups, or I don't know if they're blockchain technologies that are supposed to be post-quantum, or companies that prepare you for post-quantum. Okay, leaving that aside, what was frustrating to me was the attitude that none of the Bitcoin developers were just sleepwalking with this, that nobody was talking about it, nobody had thought about it. But you go into even the Bitcoin Talk forum, and there's posts on quantum from, I think, as far back as 2012. Literally they go back a long ways. So where do you think this disconnect comes from? Is this just from people not paying attention to, some of the more technical discussions happening, whether it's on the mailing list or other forums, or is there something else at play here?
I think that, to your point, the concept of quantum computing and the vulnerability of elliptic curve cryptography in particular, which protects Bitcoin public private keys, that has been, on the radar of Bitcoin developers since day one. I mean, I think even potentially Satoshi himself had mentioned it at some point. So this is something that, it's not news. I think that the reason why some of the current architectural decisions were made, though, particularly we're talking like a decade behind, is that quantum computing 10 years ago was thought of as, effectively science fiction. I mean, it was so far out that it was deemed like, almost impossible, right? Or like so far afield that it's like hard to even imagine a world where a quantum computer becomes real. In the past couple of years, like year and a half, again, there were these sort of kind of small incremental advancements in quantum computing, specifically by like Google, the Willow chip. There's like, some notable examples that we can point to where there have been some advancement in that industry. And I think that has, definitely kind of pushed forward the conversation a little bit, even though we are still so far away from, a cryptographically viable quantum computer or cryptographically relevant quantum computer. The fact that there's been any advancement in that industry, I think, has sort of, opened up this question of, okay, if advancements are happening and they're coming and, technical advancement in general is advancing so fast with things like AI and sort of, just it seems like the rate of technical advancement is starting to speed up in more recent years. I think that that's sort of gotten investors' attention in particular and sort of opened up this question of like, is this something that we should be more concerned about? Is this something that could potentially become a quote unquote real threat when in the past it was like a science fiction threat? And so I think that, is sort of where we started to see folks like Hunter certainly starting to think about this question and work on how we could potentially solve it at the Bitcoin protocol level. And then, of course, at some point you had, the Nick Carters of the world come in and really like bang the drum on this. There's still quite a bit of skepticism, not just in the developer community, but just like broadly amongst all people in the world about, how fast these technologies can realistically evolve. But yeah, like folks like Nick Carter are certainly saying, hey, the rate at which these technologies could advance is fundamentally uncertain. We don't really know. And given the potential total loss risk to Bitcoin in a scenario where a quantum computer does arise, perhaps we should be thinking more seriously about mitigation strategies.
Now that makes sense. I mean, so from your perspective, at least when you kind of came on board and started working on this BIP as well, was it more from I'm guessing it wasn't from the quantum is about to break Bitcoin right now. It's more from the, hey, okay, this is something that is an edge risk. It's something that's out there in the future we do need to pay attention to. And working on this right now at least helps dispel some of the narratives about nobody's paying attention to this.
Yeah, 100%. I mean, I think at this point, it's sort of broadly understood that, if quantum computers arise, it is sort of at this point. I mean, if they came on the scene tomorrow, that would be like a total black swan event. But again, at the same time, when you think about like the severity of what that could potentially mean, even if the chances are incredibly low that this becomes an issue anytime soon, again, just like the fear of just the potentially project destroying loss is sort of enough to kind of get people activated. I think, our team certainly, we're sort of trying to promote this kind of tagline of be prepared, not scared, right? Like, I'm not losing sleep over this. Like, I'm not particularly concerned that a cryptographically relevant quantum computer is going to break Bitcoin, in the super near term. But I do, kind of obviously understand that, there's no harm, certainly, potentially, in at least researching and getting clear about what mitigation strategies could look like. I think when you start to think about actual activations and making serious consensus changes, which quantum hardening Bitcoin would require, that's where you start to get into a conversation of like, is this really worth it, given where we are with quantum computing realistically right now?
No, that's fair. And can you maybe walk us through a little bit in sort of layman's terms, what exactly the pay to Merkle route does? How does that actually make Bitcoin quantum resistant in this context?
Yeah, so one of the reasons we started with pay to Merkle route, and I'll share exactly what that is in a moment, but one of the reasons we started with this proposal as a first step is because it is incredibly conservative. It's totally opt-in. We're not introducing new cryptography. We're not making any really crazy changes to Bitcoin. All we're doing with pay to Merkle route is introducing a new type of effectively taproot style output type that disables the key path spend of a taproot address, which is essentially the quantum vulnerable part of a taproot address. So there's various different types of Bitcoin addresses that have different levels of quantum vulnerability. Right now, the two Bitcoin addresses that have, I would say, like the greatest threat level if a quantum computer were to come around are pay to pub key addresses, which is where all of Satoshi's coins are hanging out, which is one of the reasons you hear a lot about Satoshi's coins when you hear about quantum. We can talk about that. And then the other kind of most vulnerable address, or the most vulnerable output type, is taproot addresses, which is what most Bitcoin L2s use. A lot of scaling technologies use taproot. Like a lot of the builders that are, kind of thinking about how we can scale Bitcoin and sort of do all of these other interesting things on top of Bitcoin, those technologies really depend on taproot. And so we wanted to make sure that as a first step, let's create a taproot address that doesn't have the same quantum vulnerabilities as the existing taproot output type does. And the way that we do that is we just create a new address type in Bitcoin that is essentially TapScript supportive. That's sort of the term that we're using, but that disables the particular part of the address type that is quantum resistant, which is the key path spend, or essentially the sort of revealed public key within taproot addresses. So BIP360 itself is incredibly conservative. It doesn't really make any dramatic changes to Bitcoin. It just reduces the quantum vulnerability. It creates an output type for Bitcoin that reduces the quantum vulnerability for taproot addresses specifically. So that's sort of why we started with that proposal, is because it's so conservative and it doesn't do all these other crazy things that, people are proposing to quantum harden Bitcoin, like freezing Satoshi's coins, or, all these other things that will certainly be much more controversial and potentially disruptive to the network.
And maybe just as a sidebar here, because you brought it up, the whole idea of freezing Satoshi's coins, to me, this just seems like one of the worst things that you could possibly do. Like that would be a forking, an instance of, I think, a hard fork in that case. But if that happens, that's not the fork that I would want to use, because that violates basically a fundamental property of Bitcoin, which is that he who controls the private keys controls the coins. And in this case, it would be, no, actually, we can freeze some of them. And that, to me, are you in the same boat there, that just would set the most horrible precedent possible?
So, it becomes a very tricky conversation when you really start to understand the threat associated with Satoshi's coins. And again, let's just play in this universe. Again, I don't think this is happening tomorrow, but let's just play this out, right? If a quantum computer comes that's capable of effectively stealing Satoshi's coins, the address types, the number of coins in that particular type of address, in pay to public keys address, is about 1.8 million Bitcoin. So in theory, if a quantum computer arises that could steal those coins, you're talking about a potential 1.8 million coins just in that address type that could theoretically hit the market nearly instantly. There are also other quantum vulnerable coins on Bitcoin. So any coins in reused addresses are quantum vulnerable. And again, Taproot addresses are quantum vulnerable. In total, we're talking about right now about 6.7 million Bitcoin in quantum vulnerable addresses. So yes, there's this sort of ethos of like, oh my gosh, let's not burn the coins. That's like crazy. I completely understand that sort of initial reaction. That being said, if you play this out, you also have to understand if we do nothing with those coins and we just let quantum computers take them and potentially flood the market, that in and of itself is a potentially project destroying event. I mean, 6.7 million coins hitting the market is not something we would survive. We're talking about like a 98% drawdown. At least. So like maybe I shouldn't say at least, but like I want people to understand the gravity of the situation. Like, yes, it is very, and again, there are lots of proposals on the table for ways to deal with Satoshi's coin. So I'm not necessarily in team burn, but I think that we should be, seriously thinking in this universe where this is a real threat and we're actually seriously considering, dealing with this situation. Letting 6.7 million coins hit the market is also would probably kill Bitcoin itself. So you kind of it's a very tough problem.
No, there's no great answer to this. Like, one is going to obviously be the most massive like sell pressure event ever, and presumably at a time down the road where there's even less float generally. So it'd be even more, let's say, more catastrophic. Maybe I'm naive to think Bitcoin would survive that. I think it would. I mean, I think it would, again, it's
on a long enough time horizon to survive it. But our kids, like that would be the type of thing where like maybe we're not retiring on Bitcoin, but maybe it comes back for our children kind of thing.
Yeah. So, okay.
I do think you bring up an interesting point, though. I mean, I just think that this is so fascinating. I will say personally, the Satoshi coins issue is the issue that is most interesting to me because it's the most crazy and the most controversial and like the most like absurd part of this whole situation, in my opinion. One thing I want to bring up, because you kind of alluded to it, is this idea that because this is so wild, right? You're talking about either burning Satoshi's coins or doing something crazy like restricting throughput on the coins or, something that effectively could be seen as confiscatory, right? Or you are letting, potentially, let's say like a minimum of 2 million coins hit the market, which would, again, be catastrophically bad for purchasing power, potentially make it such that Bitcoin does not have purchasing power for our generation at all. When you think about like the drama there, you are going to see fork wars. And, if you think about like sort of the game theory of how that plays out, you said, like, well, I don't want to choose the fork where the coins are burned. But, if all the economic nodes, which it will be in their incentive to choose the fork with the burned coins, if all the economic nodes and all the money are effectively choosing the fork with the burned coins, existing Bitcoin, the do nothing Bitcoin, essentially becomes Bitcoin Cash, and Bitcoin becomes, the burned coins chain. So that's where the money will go, and that's where the purchasing power and the value will go. So it's a really interesting problem to kind of think out.
No, it's very true, and people often forget the economic nodes matter very, very, very much in this calculus. I want to circle back to that a little bit later because there's so much to poke at there. But I do maybe want a couple other just more, let's say, administrative questions around the BIP. So it's now officially in kind of the pipeline. What sort of timeline are you guys actually looking at for this? What would you like to see, and what do you think is more, let's say, reasonable or realistic?
Oof, I don't even know if I can try to answer that question. I mean, we are really trying to be respectful of the community's wishes. We think of ourselves as like servants to the community, right? So we are trying not to have an agenda as much as possible. Like, we're putting forth proposals, we're putting forth ideas, but really, like, at the end of the day, like, this is in the community's hands, whether or not they want to activate something like this. And yeah, I think that, it would be like inappropriate for us to even like have an opinion about like when or why or how or if, that's at least my personal view on it.
Do you kind of, from like the Steelman perspective, what do you anticipate as the biggest potential pushback to this? What do you think is going to be the thing that, if anything, people will say, I don't want it because X, Y, Z?
I think again, pay to Merkle route specifically, so BIP 360 specifically, is so uncontroversial because it is completely opt-in. We're just proposing a new output type. You don't need to use it. It doesn't really introduce any new vulnerabilities to Bitcoin. We're actually just reducing some of the functionality of an address. We're not like adding in any additional functionality or anything like that could pose vulnerabilities or could pose attack vectors. So I think BIP 360 specifically is like relatively uncontroversial. There's some like very minor technical debates happening about even things like the name and, like whether or not we should, still include some functionality and not disable other things. But for the most part, this is a very, very uncontroversial BIP, which was intentional on our part, right? We wanted to kind of get the ball rolling without pissing people off, kind of knowing that future BIPs will piss people off, right? And that like future proposals are going to be much more difficult and much more politically contentious, right? Once you start introducing new cryptography into Bitcoin, then you actually do have potentially like new attack vectors and sort of other complexity and once you're sort of making these more substantive, juicy changes to Bitcoin to quantum harden it, those are going to be much more challenging proposals, I think, politically. And I think BIP 360 is sort of like, it's like the easy baby first step that's, I think no one is really pushing back on too hard, but it does open up this conversation of like, okay, so BIP 360 is step one. We know that steps 2 and 3 are coming, and those are going to be bigger, badder, like heavier lifts in terms of protocol changes. And so I think that, yeah, BIP 360 is not really the controversial piece. The controversial piece is sort of everything that we imagine will potentially have to come after BIP 360 to really fully quantum harden Bitcoin, which is going to be a multi proposal activation if it does happen.
I'll just say, saying I don't think this BIP will be too controversial feels like some famous last words, but I agree with you. I'm just, let's knock on wood here. I've got a bunch more questions for you. We do need to hit a quick commercial break, and then we will be right back. I also want to get into the game theory a little bit of Satoshi's coins, because I agree this is kind of the most interesting question about this. Like, assuming this does happen, what do we do there, and how does this actually play out? So yeah, we'll see. We may need another 3 or so hours for that. Let's see what happens, but we are going to cut to a quick commercial break. We'll be right back here on RoxomTV with more about BIP 360, quantum resilience, and more from Isabel, Fox, and Duke. Stay tuned. We'll see you in a moment.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
security matters. Zapo Bank, the only way to bank your Bitcoin. Apply now at zapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Welcome back to RoxomTV. The fiat price of Bitcoin is 64,516 infinitely printable Federal Reserve notes per coin. We are talking BIP 360, quantum resistance, and what comes next with Isabel, Fox, and Duke. Let's bring her on back up here. So, Isabel, one of the things I wanted to ask you about next is just sort of what this practically means. Let's assume BIP 360 gets, everybody's cool with it. Great. This becomes part of Bitcoin. What do users, the individual users, people like myself, need to do then, assuming that comes true, assuming this happens? What do actually like the practical next steps? What are there for people like me, people like you, to make our own coins then quantum resistant? What actions do we actually have to take?
So right now, BIP 360 itself is only creating this very specific type of output type or address. You can think of an output type as an address. This very specific output type that essentially creates like a quantum resistant taproot output type. Most general users do not use Taproot, right? Like Taproot is primarily used for builders, people working on scaling technologies, people using L2s, Lightning, etc. So BIP 360 specifically, this one baby step proposal probably won't affect actual retail users that much at all, right? Like unless you have a reason to use Taproot, it's like a nothing burger to you. Like it doesn't affect you. I think that you're asking though, like a broader question of like, how do I keep my Bitcoin as safe as possible? And I think that that opens up like a sort of little bit of a different educational discussion, which is that there are two kind of core ways that quantum computers could theoretically threaten Bitcoin: long exposure attacks and short exposure attacks. So long exposure attacks basically are attacks on public keys where quantum computers theoretically have an infinite amount of time to like hack on that key and derive the private key from that public key. The two addresses, right? There's like a handful of instances where you might have public keys available that are like made publicly available on chain, where you could be potentially faced with this threat. So number one, are you using a Taproot address? Number two, are you using a pay to public key address, which is what Satoshi used for his mining his coins? And number three, do you reuse addresses? So whenever you reuse an address, even if you're reusing from an address that does not expose the public key, which most Bitcoin users are using addresses with hash public keys, and hashes are considered quantum resistant. So if you practice perfect wallet hygiene, you never reuse your addresses, you practice perfect, privacy practices, and your Bitcoin are just hanging out in like a hashed public key address, which is probable. That's the most likely scenario right now. Your coins are not vulnerable to these long exposure attacks. So again, if you're practicing really good wallet hygiene, if you never reuse addresses and you're not using either Taproot addresses or pay to public key addresses, which is likely, you're already protected against long exposure attacks. So like, good for you, right? This is really a PSA about not reusing addresses, because when you reuse an address, every time you spend Bitcoin from an address, you do reveal your public key at the moment of spending. So if you send Bitcoin back to the address that you just spent from, your public key is now revealed. So you want to just make sure that you're not, the main thing for, I think, retail users is practice good wallet hygiene. Do not reuse address. Make sure that every time you send Bitcoin to an address, you're generating a new address every time. That's like the key thing. If you're doing that, you're like way ahead. You're like probably in good shape. So the second type of quantum resistant attack on the network potentially are called short exposure attacks, which basically means that we have an advanced enough quantum computer to derive private keys for public keys in that, let's call it 10-minute period that you are spending your coins and have thus revealed your public key. A quantum computer could theoretically take your private key like straight out of the mempool, essentially. Like if you have a really fast quantum computer that can do this special math in that 10-minute period while your transaction is in the mempool, that is something that all Bitcoin is vulnerable to, right? Like there's no way around it. Like in order to spend your Bitcoin, you have to reveal your public key, and it's not going to be considered like safe until that transaction is confirmed. So if we have really, really fast, fancy quantum computers that can like literally rip private keys from public keys straight out of the mempool, that's a situation that can only be protected against by introducing post-quantum cryptography into Bitcoin and making sure that your signatures that you use when you're spending are protected by post-quantum cryptography.
It's really just
that's a little complex.
No.
That make sense?
I love it. I mean, if there's one thing that people should really take away from this, which is something that hopefully they've taken away already, just because it's a good privacy best practice, but do not reuse addresses. Like, do not reuse them. It's really easy to not reuse them. Also, you just generate a new address. Like basically every decent wallet makes that super. Just click the little refresh button. Get yourself a new address every time. A lot of wallets do a great job of tracking where coins came from too, so you can make sure that you're not combining UTXOs that maybe you don't want to combine. There's all sorts of privacy implications there, but it's one of those things that I think, like, I didn't know about address reuse right away when I got into Bitcoin, right? But it was something that you learn, and this is a great reminder for people. Like, pay attention to this. Take the extra time, to make sure you're not reusing old addresses, because not only is it just bad for secure or bad for privacy, it's potentially threatening from a quantum perspective. So I think we got to keep beating the drum on that from multiple angles,
Exactly. If privacy is not enough of an incentive to not practice good wallet hygiene and not reuse addresses, maybe, the threat of quantum computing will be the thing that gets you to make sure that you're not reusing addresses, because there are definitely sort of quantum vulnerability implications associated with reusing addresses. That is for sure.
Yeah. And again, just good best practice, guys. Just don't reuse them, because also anybody who's sending you Bitcoin to that address, like it exposes you on multiple fronts. So like, just be careful out there, folks, and stay quantum resistant at the same time. It's a 2-for-1 win. So let's talk about actual, perhaps. Let's get back to the Satoshi coins thing a little bit, because it's been on my mind the whole time we've been talking to the rest of it, because there's a couple of different options here, right? There's what you mentioned. There's like kind of the do nothing, right? Let's just leave it as it is. See what happens. The code is law. We're not going to steal anything, or quote steal anything. Like or it is going to be stolen by a quantum attacker, but we're not going to be freezing anyone. Okay, so we do nothing. The other side of this is we basically say, okay, we are going to freeze any of these coins, like any of these coins that are vulnerable. You have until this date, Q day minus however many days to move your coins out of here if you are still alive and have access to them. If not, they're going to get frozen. You won't be able to spend them. There's sort of a third option. It's a bit of a, let's say a little bit of both worlds. And I think actually Hunter, maybe you can talk about this a little bit. I think Hunter Beast proposed this, which is basically you're going to, it's like rate limit the spending of the coins. Can you talk about that side of things a little bit if you're familiar with it?
Yeah, I mean, it's interesting when you talk about Satoshi's coins, there is, to your point, this sort of like spectrum of options for how we could handle it. There's like the do nothing camp on one side of the spectrum, and then, the most aggressive side of the spectrum, which is something that Jameson Lopp has actually proposed, is freeze Satoshi's coins, freeze all P2PK addresses, freeze basically, I mean, his proposal basically says freeze any coins that have not moved fully to quantum resistant addresses, which is like that is the most aggressive. That means that if users do not take the action of moving to quantum resistant addresses, they will lose access to their funds. So that is like the farthest afield option on the table. So there's really quite a broad spectrum of ways that we could potentially address this. And then in the middle, there's like all sorts of other things, like maybe we freeze Satoshi's coins, but we don't do anything about reused addresses, right? Not that many people use P2PK addresses anyway, so not that many people will be affected. There's like an everything in the middle that you could possibly, imagine. There is this other proposal that you're referencing put forth by Hunter Beast and Michael Casey, which basically is a protocol level change that would restrict throughput of P2PK addresses specifically. So, there's like 1.8 million coins right now in these sort of early pay to public key addresses. We think, about 1 million of them were like actually Satoshis, but there's about maybe 800,000 extra coins that were, went to quote unquote real people. Those coins are very, very quantum vulnerable, and they're considered not just Satoshi's coins, but in general, they're considered largely abandoned, right? Like unlikely to move, because back then no one cared about Bitcoin. Everyone lost their keys. And, if they're still in P2PK addresses, like we just don't think there's that many people who still have the keys to these addresses broadly. So what do you do about those? So if you're anti-burning, right, which many people are for all of the reasons that we discussed, one option is that at the protocol level, you literally restrict the throughput of those spends to some arbitrary amount. I think that their original proposal was you restrict the throughput of P2PK addresses to 1 spend per block, which means like at the most, you're probably going to see 50 Bitcoin moving per block. Most of these P2PK addresses have about 50 Bitcoin in them because that was the mining reward when these addresses were first, introduced. Like we're talking about like way back in the day when everyone was getting Bitcoin through mining 50 Bitcoin a block. Lucky them. Yeah. On their laptops,
that sounds nice.
On their computers. Yeah, exactly. So we kind of estimated that would basically like slow the bleeding of a quantum event on P2PK coins from them being dropped on the market within a matter of hours to about 8 months. It would take about 8 months to move all that 1.8 million coins if we restricted the throughput at the protocol level to 1 spend per block. We spoke to a bunch of the economic nodes, if you will, about this, some of sort of the bigger institutional holders of Bitcoin about this to get their feedback. And they basically said that 8 months was not enough, right? That like making this kind of like wild protocol change just to slow the bleeding to 8 months, which again, 2 million coins hitting the market in 8 months is still a potentially 95% drawdown style event. They were like, this just doesn't do enough. And so the proposal was recently updated to restrict the throughput to 1 Bitcoin, not 1 spend per block, but 1 Bitcoin per block, which basically extends that bleeding period out to about like 30 plus years, right? It would take about 30 plus years for all that 1.8 Bitcoin to move, right? If a quantum computer came and started hacking on those P2PK coins, it would take 30 years for them to get all the Bitcoin out, which effectively slows the bleeding to much more manageable amounts. There's a lot of like things to consider here, right? So, if you are one of those people who, has their Bitcoin locked up in a P2PK address, you now have to compete to get your 1 Bitcoin out, right? Like you have to now compete on a fee level with other people and or possibly a quantum computer to get your Bitcoin out, right? So it's not free. And if you're not paying, the highest fees, that means that your Bitcoin is essentially unmovable, right? Like you have to either pay the fee to be the most competitive person to get your Bitcoin out, which could be very expensive in this universe, or you have to just sit and wait your turn to get your Bitcoin out. And that could be, at the most 30 years. So, this is not a perfect solution either. There's lots of trade-offs and things to consider. I think broadly, the argument for making this kind of protocol change is that assuming regular actual users don't have to compete with a quantum computer, there probably won't be that much competition to get your Bitcoin out because we just don't think there are that many users who actually have public keys to these addresses. I mean, they are largely considered abandoned. So that's sort of, what we're hoping is, assuming users don't have to compete with quantum computers to get their Bitcoin out of these addresses, it'll, most folks will probably be able to get them out within a few months.
So that's interesting too, just from the potential fee market implications as well.
Yes, I'm so glad you picked up on that.
Can you go on that a little bit deeper, maybe? Because I think that's really fascinating.
Yes, I'm so glad you picked up on that. That is such a big part of this. It's such an interesting part of that. Okay, so let's just say in this universe that there is a quantum computer and you have max competition to get this Bitcoin out. Basically, the incentive for a quantum computer now becomes, I will pay whatever fee I need to pay to get this Bitcoin out, as long as the fees don't outspend the value of the Bitcoin plus whatever the cost of my computation is to run this quantum computer, right? So essentially, it's literally just a math calculation, right? Whatever the spending requirements are to run the quantum computer plus the value of the Bitcoin, minus fees, that becomes my new effectively competitive rate for fees. So you could see a situation where huge amounts, large percentages of this Bitcoin, especially if you have multiple quantum computers competing against each other, you could see a universe where, people are bidding up fees to, let's say to 90% of the Bitcoin, I mean, that could be totally make financial rational actor sense. It's essentially free Bitcoin as long as I'm taking into consideration my cost of compute. So yeah, that is Michael Casey, who is one of the co-authors of this proposal. I think that was something that was very interesting to him for around this is you're essentially potentially creating a new revenue stream for miners for, again, up to 30 years while this is happening, which is super interesting. Yeah, and essentially you're kind of redistributing those Satoshi's coins to miners rather than to users.
It's interesting too what you brought up about the case of a lot of these. I feel like a lot of these assumptions take place a little bit in a vacuum where it's if a quantum computer breaks this, but it's what if there are multiple quantum computers that within the space of either a few months or even a couple of years end up, cracking it, right? Then you basically got look, they all know what the private keys are. They can all spend these. But do you get into a crazy weird quantum computers now trying to crack each other's, but they can't, they're throttled from a rate limited perspective. They can't spend them, but it gets really complicated there. That's when it starts oh man, I don't know. I'm hoping there's multiple that do it just because I'd want to see the chaos a little bit. I don't know if that makes me bad, but.
Yeah. I will say if Hourglass is activated and you have multiple quantum computers basically competing to rip Satoshi's coins, that is a good situation for miners, right? The winner in that situation is not quantum computing. The winner in that situation is Bitcoin miners. They're going to probably get incredibly lofty fees in that situation.
And I mean, good for them, right? It really would be a nice boon, I think, in that situation, especially if a random bid-axe manages to hit one of those blocks too.
I'd rather the fees go to miners than to go to random quantum actors who don't care about Bitcoin. That's sort of let me put that a different way. I would rather that money go to the security budget and protecting the security of the network than go to quantum computing actors.
Yeah, it's interesting too, because when it comes to the economic nodes, obviously a lot of the really big economic nodes are exchanges, for example, that are controlling a lot of the throughput. And there's obviously non-consensus based things that they could do. I mean, you're basically creating, a quantum OFAC list of hey, we're not going to process transactions for these coins. You need to go to other secondary markets, et cetera. If your goal is to get into fiat. Maybe their goal isn't to get into fiat. We don't necessarily know the motivations of the quantum attacker. Maybe their goal is to hold on to that Bitcoin for another 30 years, but they want to get it in a quantum resistant address that they can't just be attacked by another quantum computer. There's so much to consider here. Damn.
The other big thing to consider is how do you know that a quantum computer is the one taking these coins? So like, let's just say, because this comes up all the time, right? Like, what's the game theory? If you had a quantum computer, what would you do, right? Like, first of all, would you attack Bitcoin, period? But second of all, if you wanted to attack Bitcoin, you probably wouldn't want people to know that, right? So maybe you wouldn't go for Satoshi's coins right away because that would be like more obvious that you had a quantum computer. Like if Satoshi's coins like move tomorrow, that like might be a trigger, like, oh God, someone has a quantum computer. But if you had a quantum computer, what if you just started like skimming off the top of like wallets with reused addresses, for instance? No one would know that you had a quantum computer. It would just be like, oh, that dumb person reused their addresses and then like moved their Bitcoin, right? Like, like there's lots of ways to obfuscate the fact that you have a quantum computer. And it's very possible that the game theory would benefit that strategy. So yeah, there's a lot of different ways this play out. On the flip side, just to give you like more craziness of like all the different ways that this could go. On the flip side, a lot of people make the argument, well, if you have a quantum computer, you're probably like a pretty big institution. You're probably like a publicly traded company or a government or something like that. Maybe you wouldn't want to go after reused addresses because that could be seen as like an event where you could be like sued or criminally liable. Whereas Satoshi's coins, you could argue, are abandoned property. And at least in the United States, there are laws to protect, effectively retrieving abandoned property, right? So it gets really interesting. And then, of course, once I go into like the legal kind of regulatory perspective here, everyone says, well, what if you're North Korea? Then you don't give a shit about the law anyways. You might as well just rip everything you can, right? So there's a million different ways that this could play out. The game theory is the most interesting part for sure.
What if Satoshi, and I don't forget who said this. This is not an original thought on my part, but I thought it was an interesting. What if Satoshi left coins, particularly quantum vulnerable, because he was so foresight and he wanted it to be actually a honeypot for quantum? Like that was the goal, was to leave a reward for anybody who could finally crack this. I think it's an interesting idea. I don't know how much realism there is to it, but it's another fascinating part of this to think about.
Oh, Hunter talks about this all the time. Like he's like pretty convinced that like Satoshi like somehow knew what he was doing, but we're just not sure exactly what he was trying to do with it. If you're really like on the Satoshi as a deity train, then you have to assume that he knew what he was doing and that this was all somewhat intentional, but we just don't exactly know what his motivations or intentions were. So yeah, I mean, we could write like a whole epic tome about just, kind of speculating on why Satoshi used a quantum vulnerable elliptic curve to protect Bitcoin.
Boy, yeah, could make for some really good Satoshi fan fiction, I think.
100%.
Somebody should get on that.
Somebody should get on that. Yeah. I do actually want to circle back just before I forget, while we were talking about kind of like what do users have to do. So for BIP360, probably not much because users don't really use taproot addresses, but I want to just sort of underscore if folks want protection against these like short exposure attacks, like, attacks on public keys in the mempool while spending, that will require users to move to new addresses. So when we do introduce post-quantum signatures into Bitcoin, if, right, who knows if this will actually happen, but if we introduce PQ signatures into Bitcoin, that will require literally just moving your Bitcoin to a new address type that supports post-quantum signatures. So I wanted to make sure I just said that before we get off.
No. I appreciate it. I mean, boy, this is such a deep rabbit hole. I'm glad that we're at the point where, I mean, I still think we have a good amount of time. It's going to be debated, I think, for many years to come. And it's going to be interesting to see what happens. Like I don't know. At the end of the day, maybe nothing happens with it. Maybe we don't actually understand the nature of these quantum computers as much as people seem to, or some people think that we do. Like there's also this whole, I don't know if you caught any of the episode that Preston did with Jeff Booth and the two guys, I'm forgetting their name, but they put out this pretty extensive and incredible paper about quantum not actually being a threat to Bitcoin at all, and our understanding of time being actually completely changed. It's like,
wow,
it's intense stuff, but it's very cool. And like, I love that we get a chance to think about this and talk about it, and that there's some action being taken so that people can't just say, look, the Bitcoin developers are doing nothing. So for people who want to find out more info about the BIP, and follow you and the other authors, where should they go?
Well, BIP360.org is where you can actually read the BIP and read, kind of some of the content and some of the work that we're doing. I think you can read Hourglass proposal on BIP360.org as well. Yeah, it is really interesting. And I would say also, follow Hunter Beast at Crypto Quick on Twitter is another good one, or myself, Isabel Fox and Duke on Twitter. We're always posting, kind of the latest quantum alpha as often as we can. But yeah, I mean, it is, I will say, just to kind of like wrap up on the point that you just made, I think this is a good place to end is, something that I'm personally concerned about when it comes to the quantum FUD is like, we could find ourselves in a little bit of like a boy who cried wolf situation, right? Where we have these like cyclical situations where quantum becomes this like, oh my gosh, everyone's talking about how quantum's going to destroy Bitcoin. And then, quantum computers don't come anytime soon and people sort of lose interest and don't care. And you have these sort of like, kind of information bull cycle moments where people are freaking out about quantum and then nothing happens. And then, what happens if like it actually does happen in 25 years or 30 years or whatever. And we've, people have sort of kind of become inoculated to it because the FUD was so loud. So I do think it's really important to kind of have a level head and kind of really be realistic about how we talk about these things, because we don't want to be in a situation where like in 30 years, no one cares because, we've kind of hammered the drum a little too hard, too early. So that's what I'll leave folks with.
We should all make sure that if you have young kids, you're telling them right now, listen, in 30 years, we need you to be ready. We don't want you to like, it's coming, and it's your job. We're going to be old and retired or something. You need to carry the torch here and make sure that we appropriately freeze or don't freeze or rate limit people's coins. That's up to you guys to decide. We'll have stepped away by that point.
At that point, there could be classical breaks in elliptic curve cryptography. Like, we don't even necessarily need quantum computers to break ECC. Like, perhaps AI will push us towards such crazy mathematical advancements that someone will figure out how to break ECC with like regular computers. Who knows? Like, my favorite way to talk about this or think about this personally is like elliptic curve cryptography is a single point of failure. So if we can like maybe introduce, a couple different types of cryptography to protect Bitcoin, then if a particular cryptographic, scheme that we're using in Bitcoin for whatever reason doesn't work at any point in time, 1,000 years out, we have backups.
Yeah, it's a good point about AI because it's like we may just not actually understand the math as well as we think we do.
Mm-hmm.
But there's like, it's proving a negative right now. There's like not really a good way to know that. But yeah, let's see what happens. But Isabel, this was fascinating. I'm glad we got a chance to do this. Thank you so much for sharing your time. Now, 2 times on Roxom in one day might be a new record. But thanks so much. People should definitely go and follow you, Isabel Fox and Duke. Follow Hunter Beast. Crypto Quick, right, is his handle?
Crypto Quick, yep.
Yeah. And BIP360.org?
Yep, BIP360.org.
Fantastic. Thank you so much. Thanks for putting up with my voice as well. And thank you out there on the stream for listening, putting up with my prepubescent voice that apparently seems to have hit me pretty hard. I am here every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time on RoxomTV. You can also catch me on Thursdays and Fridays with Hank at Roxom as well. I'm on his show both of those days of the week. So tune in again. Make sure to check out all the other hosts that we have here on Roxom. And in the meantime, have a great rest of your day. Thanks for sharing your scarce time with me. Do not reuse your addresses, and I will see you next time right back here on Roxom. Take care.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.